I don't think you're going to see much movement. As I say, buckle up for a boring day. There you go. Stock 600 is open. It is down by 0.02%. I don't think there's much when it comes to Europe today that we can add to these numbers. I think below the surface there are a few things going on. Lizzie, what are you seeing?
Yes, we have just had the CAC and the DAX opening pretty flat to the upside. But if we break it down by sector, you've got just over half in positive territory. Insurance and travel leading the gains, energy behind that, and telecoms. But bottom of the basket, healthcare and technology, food, beverages and tobacco as well. The biggest gainer, insurance, as I say, higher 0.2%, but healthcare down about the same amount this morning, Tom.
Some of the individual companies on the move. We talked about Reckitt, maybe looking at spinning off £6 billion worth of home care assets. That stock is currently up 3%. Interesting on iron ore, once again, softness in terms of that key commodity. You can tie that concerns around China and the demand there, but that playing out in terms of basic resources. Copper, iron ore, I should say, down at $90 a tonne, down almost 2%. So in terms of your sectors, energy actually just modestly up by 0.1%, but it is basic resources, and that largely down to softer copper and iron ore that is leading the losses, currently down 0.5% across your sectors.
Yeah, Joe Easton flagged to us that we should keep an eye on the defence stocks. Of course, they fell yesterday on the reporting about Ukraine's allies looking at a ceasefire. They're bouncing back today. Rheinmetall up 1.3%, Saab up 0.5%, Leonardo up 1.1% this morning, so recovering from yesterday.
Should we talk about the Fed a bit more?
Shall we again?
Should we yap a little bit more, as apparently we're being accused of? This is Jamie Dimon on Fed cuts. Take a listen.
It matters to me because I have to listen to all that people yapping on TV all the time about something that's almost irrelevant. I mean, they're going to do it, 25, 50 basis points. It's not going to be earth-shattering. It doesn't mean that much. I mean, I think they need to do it. So I'm not, I think Jay Powell does do a great job, but it's a minor thing.
Let's carry on yapping. Fabiana Fedeli, CIO for Equities, Multi-Assets and Sustainability at MG Investments, sitting around the table with us this morning. Should we care? Does this actually make any difference? What is the message that we're going to get from the Federal Reserve today about the bigger picture, the global economy, the US economy? Is that what we should be listening to?
We should. And if you look at how the Fed has behaved until now, we think that a 50 basis points cuts is a little bit out of sync with what they've done and how they've conducted themselves. So we would expect a 25 basis cut and some discussion around, yes, the economy is weakening, but it's not that weak, it's still holding out well, and we are ready. We have other 2 meetings to go this year. So from that point of view, it does matter, though, because yields have come down quite a bit on expectations of a 50 basis points cut, and this could disappoint fixed income markets.
What signal is it going to send, though, about the economic health of America? Because this, I think, is what really a lot of people are trying to figure out right now. Are we heading for a recession? What kind of a slowdown are we seeing? Is it a soft landing? Is it a hard landing? Does today provide any clues as to where we are in that journey?
I'm not sure that the Fed is going to provide clues. I mean, we've seen the data. The data is weakening, but it's not really in panic mode. There's no reason to push the panic button.
Right.
And I think the Fed will just convey that message.
I'm interested in your BOE call. You actually see a 25 basis point cut tomorrow. That is not the consensus. We've just had the CPI numbers out this morning, very much in line with estimates, but traders even pairing their bets on BOE cuts. I wonder why you actually think that we will see a cut.
Well, the economy is weak. the CPI has come down, is not at target rate yet, but I think some support for the economy at a time when interest rates are very restrictive would be warranted.
And what about after the budget? Do we get a more aggressive Bank of England if there's a fiscal tightening? Do you see UK equities holding up?
You know, that has always been the big issue between what fiscal policy does and then the response on monetary policy. We'll have to see what the budget brings. And I would say that the BOE will be very measured in its steps, but definitely will take into account what the budget does.
Do treasuries look a bit rich at this point? And if they do you allocate out of treasuries and into UK gilts?
Great question. They do, and we have. So if you remember, just before the summer, we issued our second quarterly outlook, and we said this is actually a better market after having been extremely convinced about our equity versus fixed income preference for a while. We said, well, now is when the odds are moving towards a fixed income market. But the fixed income market has moved really fast, particularly in the US. So we're still overweight duration, but we have moved some of the capital to UK gilts and credit because they moved much less than the US paper.
On the equities front, where are you finding pockets of outperformance in this environment?
Look, first and foremost, there's still pockets of outperformance. There's still places where you can make a larger performance than you could in fixed income markets, and that's good news. Think about all those equity pockets that have actually been negatively impacted by the higher for longer fear. One of them is in the infrastructure sector. Utilities have already started to run up. You've seen that, but there's still some to come. And then one sector that has been very unloved for a long time is renewables. That has been impacted by higher interest rates. Some areas are still impacted by supply glut. You saw some recent news, and by difficult balance sheets. But there are some stocks that actually will benefit from a better sentiment on rates.
Can you answer me a bigger picture question? I've got a euro trading at 111 versus the dollar. I've got European equity markets looking really strong, like near record highs. DAX is doing really, really well at the moment. Yet I listen to Mario Draghi, and I'm hearing existential crisis. Europe really is in trouble right now. We need an economic plan that's going to get out of this fast. Otherwise, we are in serious trouble. I'm struggling to match the market narrative with the narrative that I hear and see on the ground daily out of the German economy. And I listen to Draghi, and he sounds desperately concerned. Why do these two things not match up right now?
Well, first and foremost, Mario Draghi is looking at the longer-term picture.
Sure.
And longer-term, Europe has a competitive disadvantage. They need to move ahead with regulation. They need to support some of their industries better. They need to consolidate the banking sector, the telecom sector. There's a lot that Europe needs to do to be competitive on the longer term. Shorter term, we were all so pessimistic on Europe. The market was discounting so much ill in Europe, and so we actually are better than we thought we were, and that is what the market is responding at right now.
So if you see a BOE cut tomorrow, do you see an ECB cut in October?
I don't think the two are necessarily linked, but there is a possibility of an ECB cut in October. Always data dependent, but it is likely.
Okay, well, we'll get more ECB speakers later on today. I also want to get the big picture on China, because I think you've been buying bits of China. Is that because you're banking on more China stimulus?
Actually not, but there is so much discounted in China in terms of the weakness in the market, and particularly in the consumer. You've seen it now that even the high-end consumer is starting to weaken, which was, if you want, the last bastion of consumer health in the country. So we actually started buying selectively some consumer staples and consumer discretionary names. They generate very high free cash flow. They're giving it back to shareholders in terms of buybacks and dividends, and some of these stocks are healthy.
That did stand out from your nose, because it's so rare to hear anyone saying they want to allocate in any way to China. Where do you draw that? Do you draw that out to I mean, you want to be domestically exposed to some of those names in China. Do you also want to be exposed to the names in Europe that have that market share over in China, or is that still looking, you're not getting the valuation call there, they haven't been priced in yet? How are you thinking about the European play on China?
In general, we've talked about this previously in the program. We do prefer China names in China rather than the exposure from Europe. There's also a lot of competitiveness improvement in China towards actually their international competitors.
As I look around the world, though, I'm trying to understand how I should play this. The US economy still looks like it's okay, and the Fed feels dovish, and it's going to be cutting rates to try and keep the economic cycle lasting a little bit longer. Europe's got a multitude of problems right now, as has been laid out by Draghi. China looks like it's potentially entering a deflationary cycle. Do I start from the idea that I want to be investing in the best place at the moment economically, or has the market sufficiently discounted the risks elsewhere that is where the opportunity lies?
You know, if you think I assume that you're talking about equity markets now. And if you think about the longer history of equity markets, generally the economy and the market haven't necessarily gone hand in hand. There are other factors that actually will help stocks perform, and these are earnings, and earnings can be based on competitive advantage of companies, new technologies. We see a lot of that at the moment.
But all of those feel like they're still in the States, but okay,
I actually think they are pretty much in everywhere, and you just have to be very careful. So if you think about the market since July, actually among the top 40 stocks, best performing stocks in the MSCI ACWI, the majority was in India, wasn't in the United States, and only one of the Magnificent Seven, which is NVIDIA, was in the top 100. So the U.S. has lost a bit of its shine at the top of the equity market.
Yeah, and a 50 basis point cut from the Fed today could accelerate the flows into Indian equities, arguably, as well. Where are we in terms of the reset? You talk about the Mag 7. Where are we in terms of the reset around those AI names in that space?
You know, what is interesting is the market has been broadening. If you look at the top names performing across worldwide indices, actually most of them now are not anymore in technology. So the market is looking at the valuations of the Mag 7, valuations within the AI-related technology, and is thinking, well, there are other areas where actually I can find more value. And I think that can continue for a while.
Getting some headlines going through from BI, our colleagues. Sees 20, I'm assuming this is what I'm looking at here, sees economic growth, well, basically it's signaling faster rate cuts from the Fed. So we'll come back and get some more details on exactly what is being signaled here. But the market is already positioned for 50 today. Is the expectation we get 50 today? Do we get more than 50 in the future? I.e., do we get a series of 50 basis point cuts coming out of the Fed? Fabiana, nice to see you. Thank you very much indeed for stopping by to see us. Fabiana Fedeli, CIO for Equities, Multi-Assets and Sustainability at M&G Investments. Let's take a look at the Core 6 this morning and see what is happening here, because what you do see on the left-hand side of the screen is a significant amount of weakness in Novo Nordisk, which has been oscillating quite significantly at the moment, but today the oscillation feels maybe a little bit greater, the amplitude a little bit greater. The market feels maybe a little defensive this morning. Look at what's happening with Nestle on the right, Novo Nordisk on the left. This is a pricing story about what is going to be happening with Ozempic potentially in the United States and the potential for cuts in the pricing of Ozempic, and that is being reflected in the price this morning, guys.
Yeah, I mean, this is what's so the story is, this is really interesting because as part of the Inflation Reduction Act, as you were mentioning, it empowered the US government to be able to negotiate prices. And you had a senior member of the Novo team yesterday at a conference saying, essentially, we think we're next. Because they've already negotiated prices down by 38% to around 79% for 2026 for 10 of the world's biggest medicines as a result of this policy, the Inflation Reduction Act, and the powers that gives them. And the expectation then is for the members of their own team, a senior vice president, in fact, speaking yesterday, saying that it is, and I'm quoting, very likely that Ozempic will be part of negotiations in the coming round, and we are ready for that. Maybe some investors not ready for that because you see the price action today, but that seems to be a potential headwind for this business. There's a lot of political pressure in terms of drug prices, clearly, in the US, and particularly as we lead up to the election in November.
Yeah, of course, we're going to have the CEO of Novo Nordisk testifying before a Senate committee led by Bernie Sanders about the drugs prices next week. So it'll be a continuing story. But let's check in on some of the individual stocks, other individual stocks that we're moving at the open with Joe Easton. Joe.
So one stock moving, Lizzie, is Campari over in Italy. We've got a shock resignation of the CEO from the drinks maker David Campari this morning. Now, the CEO only took the role 5 months ago, but we have seen a couple of profit warnings from this firm in recent months. And as such, we're seeing that change in leadership pretty dramatic on that one. It was in and out of a trading halt in the pre-market, and we are seeing it down 5% over in Italy. One of the worst performing stocks that we've got today. Then we've also got those deals news to look at as well. Reckitt was one of the best performing stocks in the UK this morning, potentially selling that unit of all those favourite brands, Sillet, Bang, and the other home care products as well. That one is gaining 2%, potentially £6 billion worth of assets in terms of that one. Continental, not too much movement there, pushing ahead with the spin-off of their automotive unit, despite that big slump that we saw last week. And just a little one down in the UK, mid-caps, Advanced Medical Solutions. It is a supplier to the medical sector, makes components, that kind of thing. Getting a takeover bid, according to Sky News yesterday, we're up 9% on that one. In terms of share sales all over my screens this morning, and a couple that stood out was Moncler, a director of the Italian luxury goods company, selling some stock. Now, BI writing that is coinciding with a decline in luxury goods sales at the company that we've seen in the sector. And ISSS, the cleaning company over in Denmark, also seeing a investor selling some shares this morning. That one actually holding pretty steady today. In terms of defence, Lizzie has already touched upon it, seeing a bit of a rebound in most of those shares. Saab over in Sweden holding pretty steady at the moment, but Leonardo was one of the worst yesterday, coming up 2%. The focus on whether allies of Ukraine looking at potential routes to a ceasefire in the future. Definitely an uncertain situation, but that was why the sector was down yesterday. Mining, meanwhile, a bit of a rebound in that one. Now the sector is actually going the other way. I'm seeing those declining. I saw some pre-market moves higher earlier, but we are actually seeing more losses. As Tom mentioned earlier, iron ore futures dropping as much as 4% overnight. Chinese markets reopening following a holiday. Couple of broker moves to bring you. Firstly, in insurance, Goldman Sachs. Lizzie did actually touch upon this sector as well. One of the best performing sectors today. Lancashire up to buy. Goldman putting buy ratings on a lot of stocks, saying the Lloyd's of London market looking strong today. And finally, Commerzbank. This one gets an upgrade over at Barclays. No prizes for guessing why they're upgrading this one, but it's all to do with the UniCredit potential takeover. Only one sell left on this stock now for Commerz, and it's up 0.8% in Germany.
Sterling job, Joe Easton. Thank you very much indeed. Added some colour to an otherwise pretty morose day as we lead up to that decision from the Federal Reserve. Some interesting stories below the hood. Joe, thank you from our exit team walking through some of the stocks on the move this Wednesday. Coming up, Stellantis workers in the US are set to vote on a strike. More industrial action in the US. We took a look. Now, the labour market action, or at least the labour action, could impact one of the world's largest car makers. That is next. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the...
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Welcome back to the opening trade. We are 20 minutes into today's session. All eyes, of course, on the Fed decision. Currently, European stocks down just 0.1%. Now, it's a corporate story unfolding and a focus on industrial action. The United Auto Workers, the UAW, is asking members to greenlight a strike at Stellantis, escalating what is becoming a tense standoff with, of course, one of the world's largest car manufacturers. Let's get more details then and bring in Bloomberg's Albertina Torsoli for an update on what is happening. How big of a risk is this then, this planned strike action? What could it mean for Stellantis?
It is a risk. Stellantis, is a big player in the U.S., the maker of Jeep, Chrysler, Dodge cars. The U.S. is the single biggest profit pool for the company, and the words by the union leader yesterday were quite strong. Stellantis has declared war on the American working class. This is what Sean Fain said, but of course he always uses tough words. Alleges that the company has backtracked on a deal made last year with the union. The company firmly denies this, but of course, all eyes are on the North America business and the U.S. in particular.
And Albertina, dealers angry too. Why?
Yes, there's been a strong letter last year by the leaders of the biggest, union dealer network, again criticizing Tavares for having brought rapid damage to the brands, not investing enough. The company has several problems in the U.S. and, Tavares has touched upon some of them: price and product positioning, inventory management. There's a class action in the U.S. and also high-profile departures at the company. The company says it's working on those brands, but yes, they've definitely had more difficulty selling Jeep SUVs at a time that, SUVs are all the rage. So a lot of focus really on this region and a big problem, a headache for the CEO of the company.
There's a great line that stands out from a story that's been written on this company by Bloomberg. Philippe Houchois, the Jefferies analyst, has a great explanation for what is happening at this company. With a single-minded focus on cost, Tavares has made Stellantis more efficient than competitive. I think that kind of sums up maybe where we are with this business right now. And talking of cost-cutting, the Italians are getting in on the act as well. The EV story obviously is hugely challenged in Europe at the moment, and it now looks like the Italians are going to pull funding for a planned battery plant. Walk us through the implications of this as well for the long-term competitiveness of this company.
Yes, there's been a long-standing back and forth between the government, the Italian government, and Stellantis. So, problems in the U.S., problems in Italy, a lot of pressure points on Tavares right now. What is happening in Italy, though, also has to do with the steep EV slowdown that we are seeing in Europe. Customers are just, not buying these EVs because the technology is too expensive. This is a factory that is being built by ACC, which is a joint venture. Two biggest shareholders are both Stellantis and Mercedes. But the clients have now asked for cheaper batteries, cheaper technology, and ACC just does not have this technology. So, the government is reallocating those funds. This factory is not being built. Work has stopped on it, but it comes in the context of a lot of M-tier plants in Italy and production that has slumped in Italy for Stellantis, with the CEO shifting a lot of the production to lower cost sites in other countries. And obviously, the government of Giorgia Meloni has been eyeing this very closely and trying to put pressure on Tavares to build more and to recover, some of that lost output, which obviously has huge implications for workers and for the industry.
Albertina, great coverage. Really enjoying reading it. Thank you very much indeed. Albertina Torsoli joining us on what is happening at Stellantis. Chris Bryant's story in the opinion section on your Bloomberg, really worth reading as well. Talking of industrial action, it does look as if we are going to see a continuation of talks which started yesterday between Boeing management and the IAM. This is a mediated conversation that is happening between the two, trying to resolve the issue that is happening up in the Pacific Northwest right now. Boeing potentially facing quite an elongated strike here at a time when the company desperately needs cash, desperately needs to deliver aeroplanes, and there's talk now of a massive capital raise being required, maybe quite a big capital raise, just to stabilize the situation from a financial point of view.
Yeah, Ken Herbert at RBC Capital Markets saying that Boeing's going to burn through about $500 million in cash each week that workers are on the picket lines, and therefore, as you say, you've got these various measures to try and preserve cash, the freeze on pay rises for promotions, the freeze on hiring, less money spent on air shows. It'll be less exciting when you go, Guy, and less money on charitable donations. I wonder, is this really the sort of strategy that you want to be pulling up the drawbridge when you're trying to improve morale? And
that's pretty desperate, isn't it? Charitable donations. The air shows will always be exciting because Guy Johnson will be there.
But I genuinely. Actually, you can draw a line between the car sector here as well.
Yeah.
I think air shows are becoming less important. I have to say, having seen Farnborough this year, fewer people showing up, definitely. It seemed to be fewer. It didn't have the buzz that it did a few years ago. And I wonder whether these big kind of industrial events are fading in their significance.
$58 billion worth of debt at Boeing. We're seeing that industrial. Are we seeing more industrial action right now than we have done historically? We're seeing it at Stellantis, potentially. We're seeing it at Boeing. That's US focused. And can Airbus benefit? Is this one area of the industrial chain in Europe where we actually have a leg up, or at least the Europeans do?
Yes, but Airbus is facing its own challenges. It's got the Pratt & Whitney engine issue, which is hugely problematic. It's got a supply chain which remains hugely problematic. It's trying to ramp up production. That's proving difficult. It also has a labour issue. Trying to bring enough skilled people into this segment of the industrial base of Europe at the moment is hugely challenging. Anyway, we'll continue to monitor what is happening up with Boeing and Seattle. Up next, we're going to talk about what the next commission is going to deliver in Brussels. We'll have that conversation next. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
This is the opening trade. We're 30 minutes into today's session and not much doing across European equities this morning. The Stock 600 lower at 0.2%. The FTSE 250 lower 0.25%. If you look at it by sector, about a quarter in positive territory. Basic resources still bottom of the basket, but the pound still higher after that UK CPI reading came in pretty much in line with estimates, even though you've had traders pairing their BOE bets. Treasury yields still pretty steady. Wall Street futures pointing a touch higher as we head towards this Fed decision. Let's get away from the markets and into the politics. The European Commission President Ursula von der Leyen laying out her ambitions for restructuring the EU executive arm yesterday. But in the next few weeks, she really is going to face the challenge of parliamentary hearings. So let's look at this in more depth with Bloomberg's Oliver Crook. He joins us now from Berlin with all the details. Ollie, what are we expecting from these hearings?
Yeah, so listen, this is a very long process, Lizzie, that began on June the 10th when this election took place within Europe. And of course, it precipitated a great many events across Europe, including basically the French government, Macron dissolving it and then calling it back into action. We now got all the commissioners. We've got the shape of the commission going forward, but it's not over yet, right? We still need to go into committee. We have to have the parliamentary sessions sign off on these names that have been put forward. Again, there's 24 of them or so that have been put forward. Some of them might get sent back, so you have to go back to the drawing board. And if Ursula von der Leyen wants to keep her timeline intact, which is cutting it kind of close right now, of November the 1st to have the full commission there, we need to get this process moving very quickly, because once they've sort of deliberated about all of these candidates moving forward, what they need to do then is vote on it, and then that will be the final sort of step there. So listen, there's been a lot of this horse trading done in the background. What Ursula von der Leyen does not want is a huge sort of open brawl about this coming out into public. So really what they wanted to do is solidify these names going forward. And again, this is going to be absolutely crucial for a European Commission, which also at this moment, as you know, there's been a lot more Euroscepticism that's even been voted into the parliament. So there is definitely some tension there. And as I say, nothing of the tension that's happening in the domestic politics of both France and Germany, where again, you see that Euroscepticism going up, which will make it a little bit more difficult potentially on the procedural factors here, but also longer term in terms of what they're trying to do with this European Commission and the Draghi report, and really trying to get a bigger and stronger Europe rather than a weaker and more fragmented Europe.
Oliver Crook in Berlin, thank you very much indeed. For more on this story, we're joined by Daniela Schwarzer, Executive Board Member at Bertelsmann Stiftung in Berlin. Daniela, thank you very much indeed for taking the time to join us this morning. What message is Ursula von der Leyen sending with her new commission?
Well, she gave the Commission a clear theme. She said that this Commission is about the double transition, digital and green transition, in a new geo-economic or a tougher geo-economic environment. So with that point, there is continuity to her first term. But now she has given us some surprises, basically, yesterday with the choice of vice presidents. She has put a number of women there who weren't expected to get those jobs. I think that is a clear signal to member states, because she asked all of them to propose a man and a woman for the top jobs. Some of them didn't, the latest example being France, where Thierry Breton withdrew, and then the current foreign minister was proposed as commissioner, no woman in the mix from the French side. So I think she sends a clear signal to the member states that she still, despite all the constraints she has, that she is trying to design her team in a way that she thinks works for Europe. But what we also don't really know is when you look at the chart with all the faces and the areas of work, who actually reports to whom? They're vice presidents, but you don't really know which the teams are that they work with.
Does this commission resolve the Draghi question, which is that Europe ultimately faces, the EU ultimately faces an existential threat unless it becomes more competitive? Is this the commission that is going to deal with the Draghi question? Is Draghi right at this point to raise the bar so high? Can Europe deliver on what he hopes?
First of all, Draghi is absolutely right, and the report was well timed. First of all, he gives a very sober but realistic analysis of the current economic situation in the European Union, which, you know, has two sides. One is there's a huge potential to live. We can do much better than we do. And the other thing is we have underinvested. We haven't done enough for research, innovation in terms of tech. We are lagging behind. We don't have the funding instruments in place, neither public nor private, that we need to catch up and to be a leader again. And the European Union, you know, with its role in the world, it's very much based on its economic power. This is why the report is not just about economics and growth. It's really about the question whether the European Union will be able to stand its ground in a way that is getting more competitive, that is getting more conflictual. And so I think the Draghi report is absolutely right. And Ursula von der Leyen, she has sent some signals. For instance, the introduction of a commissioner for defense industry, that is an important point. This is not because member states will give their defense policy to the EU. No, quite the contrary, but the industrial base needs to be developed within the European Union. Secondly, the focus on digital. I think that is also good news that she has put a prominent person into that role from Finland who has a lot of knowledge on the issue. So I think we will see some movement, but at the end of the day, it will be the Commission and the member states that need to tackle the problem. And the main thing is that countries need to understand that they are better off if they cooperate on those competitive issues rather than drawing up borders and trying to do their own thing.
Countries need to understand that they need to work together on these issues. You said the signalling is there, the report is there, Daniela, but if you look at this kind of nativist shift in Germany around the AfD, arguably, at least the nationalist shift as well, and you're seeing that reflected in France, so how realistic is that? When they need to stop talking and stop signalling and actually start working on this, but how realistic is that given the domestic politics of France and Germany and others?
It's very true that we have seen a rise of far-right populists, and by the way, not only on the national levels, but you also see a certain shift to the right in the European Parliament. But that doesn't mean governments will give up or that those issues will go away. Europe is under huge pressure if you just compare our competitive situation with the United States or China, which are the other large markets, and Europe can still catch up with those. The answer, in my view, is to find a new balance. There's a lot of criticism of the European Union at the moment that it overregulates, that it's interfering, that it's actually limiting the competitiveness, in particular of small and medium-sized companies. And that is also something that Ursula von der Leyen has acknowledged, and I think change will have to happen in that area as well. And then on the other hand, there are things going forward. For instance, look at the French initiative to host an AI summit in February. The domestic situation in France is, of course, as tricky as we know. There's no government at the moment. There's a prime minister who has to put together his team. But at the same time, things are going forward in the ways that the president can push them. So I think European politics in general over the next 5 years will be maybe at some points slower, but we will see progress because I think the acknowledgement now is there, not only through the Draghi report, but also through the Letter report on the single market, that really, given the competitive situation on a global scale, the best thing to do is to work closely together in some areas where it's of mutual benefit, and maybe to do a little less in others. And that is a possible and good narrative that those who understand the EU is of strategic importance can actually bring to national audiences, and that will make life for those anti-European voices who very often play with populist rhetoric and are really not very convincing if you look at the fundaments of their positions and their concrete proposals. I think their life may get more difficult if the European Union and national capitals agree on some priorities.
Daniela, just back to the lineup and specifically on France. We're talking about Stéphane Séjourné's role. I wonder if you agree we shouldn't underestimate the impact that he can actually have in this role. How much of a player you think he can actually be?
Well, I think he can be an important player. He is not someone known for the issue of industrial policy. He's been foreign minister lately in Paris. However, he is very close to Emmanuel Macron, and I think in this current situation, that is important to acknowledge because Macron has been pushing the European Union to do more in standing its ground in international competition. He has focused on foreign and security policy, but he has also focused on industrial and economic policy. And so Séjourné, he's covering one of the key issues of the Draghi report. He won't be able, of course, to do this alone, and this is why sort of below the level of the European Commission, it is, or behind in the backdrop, it is extremely important that France and Germany work together very closely. If the two major economies of the Eurozone cooperate and get a joint approach, that is almost 50% of GDP, and that's not unimportant to know.
Daniela, the history of Europe over many years has been that Europe needs a crisis in order to fix itself, to take a step forward. Is this a crisis, or is the crisis coming?
We have had a number of crises, and some of them are still in effect. If you look at the latest security crisis, that is in full swing. That is Russia's attack on Ukraine as an independent country and its sovereignty being violated in Europe, very close to the EU's borders. So we have a security crisis. We have the need to invest more into our security and security order. And that is one of the themes that will be on decision makers' minds for the next 5 years. In terms of economy, we are not in a crisis, but we are in slow decline. And we know the vulnerabilities also of the Eurozone are known. We also know that we are not lifting the full potential. Think about Capital Markets Union and the need to deepen the European capital market. So I hope that we are at a moment in time where there's a realization of the weaknesses before they turn into a crisis. And I do think that with the Draghi report and some of the political reactions that have been out there over the past few days, we see that the sense of urgency has grown.
Okay. Daniela Schwarzer, Executive Board Member at Bertelsmann Stiftung, on how to think about changes at the top of the European Commission and those competitiveness challenges. Daniela, thank you. A redhead crossing the board right now, been waiting for this. This is a breaking news headline then around Google winning its bid to topple a close to 1.5 billion euro antitrust fine over advertising. We've been watching for this, of course, after the EU Commission won that significant victory last week around taxes owed to Ireland, or at least taxes that Ireland arguably didn't want, for around 14 billion euros. That was a victory for the European Commission. On this news, Google has actually won, much smaller amount, but winning that bid to topple, to push back on that 1.5 billion euros in terms of antitrust fines. This is over advertising in the European Union.
As you say, the Commission has had a series of victories over the last few days. This is one that goes in the opposite direction. But nevertheless, this just going back to the story we were just talking about, this speaks to the idea that Europe is a regulator, that it has this perception of being the regulator rather than being the innovator. And it goes back to this bigger picture story of how Europe wants to be represented. Is that the true reflection? It has I think I read somewhere this morning a nice line talking about the fact that Europe basically just has a PR problem. It is perceived as being the regulator and being of stifling competition and stifling size and scale rather than being an institution that is promoting that.
Which is surely the point of the new lineup from von der Leyen, to put the emphasis from competition onto competitiveness and enact the Draghi report. But as Daniela was saying, it's really about who reports to whom and whether they can actually make that happen.
And to your point as well around how you frame this, the PR of this, I was speaking to someone who has a close sight on these things, saying that actually the regulatory framework in Europe provides certainty for businesses and investors. You're seeing regulatory frameworks pop up across the US in different states when it comes to things like generative AI. So you have different regulations in New York versus Arizona versus California. That makes it really, really difficult. In Europe, you have the EU AI Act across the Union. But that gives certainty and clarity, is the argument, the counter-argument. But that doesn't get, it's not framed in that way, to your PR point.
It's seen as being anti-size, and that is kind of where the argument starts. If you think about companies like Google, why doesn't Europe have a Google? It's because we don't want to create something that has been that big. Vestager is pushing back on this whole kind of Draghi report as well, saying that size isn't necessarily the answer and that we need to be careful that we maintain competition. Then you think about what is happening in the banking sector and what's happening with the consolidation there. That's something we need to think about. She highlights Siemens and Alstom as being the two kind of companies which are doing fine, but many people argue should have been put together to create a national champion, a European champion in that space. And it's kind of which way you approach the problem. Do you allow the scale to happen? Do you then need a regulator for it? Or do you not allow the scale to happen and then you don't have the problem in the first place?
Okay. Well, let's get back to the Middle East politics now, away from Europe. You did see a bit of a reaction in the oil price. It's now lower 0.75% at $73 a barrel. But this is after the Iran-backed group Hezbollah is accusing Israel of orchestrating an attack that killed several people and left almost 3,000 wounded in Lebanon. A string of medical emergencies were reported across the country following the mysterious explosion of thousands of pages. We can get more detail now from Horizon's Middle East and Africa anchor, Jemana Besetchi. She joins us now. Jemana, what do we know about these attacks via the pages?
Yeah, well, it was a pretty remarkable afternoon in Lebanon. At around 3:30 p.m. local time, what we saw was a series of these handheld pagers explode simultaneously across several cities within Lebanon, injuring 2,800 people per the Lebanese Health Ministry. 9 people were killed, including 1 child. And then also the Iranian ambassador was injured too. A short while ago, the Iranian embassy actually had to put out a statement saying that he is progressing well in his treatment, therefore confirming that he also was harmed in the simultaneous explosion. Per Hezbollah spokespeople, this was the largest security breach that the group has ever seen. They were very quick to point their finger at Israel, blaming Israel fully for the act that was put forward yesterday. And indeed, those were followed up by comments by the Lebanese Prime Minister, Najib Mikati, also putting the blame on Israel. It is important to note, though, that Israel has not said anything yet. They have not officially commented. But of course, this does open up a new type of warfare in that Lebanon Hezbollah warfare that has been going on, the daily exchange of crossfire, in the sense that it's moved on from a hot war to a cyber war. And one of the other questions that people have been asking is, why were these Hezbollah operatives using pagers to begin with? And this all goes back to a speech that Hassan Nasrallah, the chief commander of Hezbollah, gave back in February, where he warned operatives of using their mobile phones because of the potential of them being hacked or intercepted. So he encouraged them to move to this lower technology platform of pagers. But of course, yesterday, as we saw, there was a massive security breach.
Yeah, Jemana, so from a hot war to a cyber war, but one with very real human consequences and impacts, of course. What do we know? There was some debate as to whether or not this was the Israelis allegedly remoting in and using the batteries to overheat. That seems to have been dismissed by most analysts. What do we know about what may have happened here in terms of compromising these devices?
That's right. So cyber security experts are very quick to weigh in here. It is also noteworthy that Al Akhbar, which is a news outlet that's very close to Hezbollah, said that the group had received a shipment of pagers just a short while ago. So these were new pagers that had been brought in. And then a couple of theories came through. First of all, we had some comments. Bloomberg got some official comments from the telecommunications minister in Lebanon. He said that the cause of the explosions were the batteries overheating. But many cybersecurity experts say that that is unlikely. It is unlikely that these could have caused that much damage. The other more likely reason for the compromise of these pagers is that they would have been tampered with at the time of manufacturing. Now, what we have heard is from the Taiwanese company that originally would be the manufacturer behind these pagers, and they have said this morning They did not manufacture these specific devices, but what they do think is that one of their distributors within Europe would have somehow had the manufacturing process compromised, which is why these small explosives, just 10 to 20 grams, would have been placed in the devices that allow them to combust simultaneously. So really a high intelligence operation going on here, and it seems as though there were many different parts of the process involved.
Jumana, thank you very much indeed for the update. We'll continue to monitor the fallout from what happened yesterday. Jumana Pasechi, Horizon's Middle East and Africa anchor, joining us out of Dubai. We'll leave you with a live shot of the American University Hospital in Beirut as we continue to think about what has happened here and what it tells us about whether or not we're going to see escalation or de-escalation as a result of yesterday's events. This is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of such. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Welcome back. We are joined now for a market view as we lead up to this Fed decision by Raphael Thoa, Head of Capital Markets Strategies at Tico Capital. Raphael, thanks for joining us around the set this morning. What is going to be more important for this Federal Reserve? Is it the size of the cut or is it the statement and what we hear from Jay Powell?
I think, Tom, you're right to start with this. You know, we are focusing a lot about the headline news. Is it going to be 25, 50? Obviously, it matters. But there is many more ways for the Fed to carry a message.
Bringing together enough talent in one organization is really hard to do. And if you're working on a problem that, you know, may be modestly successful, it's kind of easy to get the first few people to join. You can give them a lot of equity. But then it gets really hard. Why is employee 20 going to join? Why does this matter to the world? Why should someone work on your startup versus any of the other things they could do. And picking something that matters if you're successful is a great way to do that. And so I think it's really important to think about when you're starting the company, how is this going to evolve into a vision that a lot of people want to help with, that a lot of people want to be associated with? Because I think getting talent and getting mind share is really hard in the current environment. And people are interested in startups that matter. Another thing that we've noticed among our best founders again and again and again is that they have a confident and definite view of the future. They may be wrong, and so we say it's good to be confident and flexible, but this idea that you are confident and definite, this is what I think is going to happen, or this is what is going to happen, and being relatively sure of that, having courage of your convictions, being a clear leader, saying we're going to do this, and that's why, even in the face of a lot of doubt, that seems to really correlate with success. And this comes back to having an ambitious vision, but the entire startup ecosystem is best set up to support companies that have a low chance of success, but are huge if they work. And I think going for something that is huge if it works will attract the best people. I'm not going to talk too much about the team. There are a lot of obvious things I could say that have been said many times by many people about, you know, you need smart people who want to work really hard and who communicate well. These are all really true. But I'd like to mention a few non-obvious things that we've noticed that we don't hear people say as much about the team you need to assemble. Vinod Khosla says that the team you build is the company you build, and I really think that's true. I've still met only a handful of founders, I think, that spend enough time on recruiting, like Mark Zuckerberg is famously one of them. But building a great team, I think other than picking the right market and building a great product is the most important thing you do. All founders go through a transition, all successful founders, where you switch from building a product to building a company, and building a company really is about the team. So you need optimists. The whole world will be telling you why you're going to fail as a startup. If you don't have that internal fire of belief, if you don't have people who say, you know what, we are going to do this, and it doesn't matter what the haters say, we're going to figure this out. And there is, you know, this problem, it must be solvable. If you don't have the spirit of optimism on the team, it's very hard to succeed when the world continues to punch you in the face. You need at least some idea generators. There are a handful of people in any company that has gone on to be really successful that I've been able to work with who are just really good at coming up with lots of ideas. You don't want too many of these people because that's more ideas than a company can follow through on. But having some people within a company that are just constantly throwing out new ideas, most of which will be bad, turns out to be super important to have on the team.
Something will happen. At Tikeo, we are very much buying into this story of European sovereignty, something we discussed before, this idea that, yes, something is brewing, there is a political will to make something happen. Draghi, you saw von der Leyen, cabinet more recently. All of those people are willing to take action to make sure that Europe can somewhat catch up to the rest of the world.
Raphael, great to see you. Thanks for stopping by to see us. We greatly appreciate it. The Fed is the firm focus, some great coverage coming up throughout the day. We're counting you down to that important decision. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
The most eagerly anticipated Fed meeting in years, a cut appears certain, but by how much remains an open question. Google wins its latest court fight with the European Union over 1.5 billion euro fines for thwarting competition for online ads. And Hezbollah accuses Israel of planting explosives and pagers that killed 11 people and wounded thousands more in Lebanon yesterday, increasing fears of an all-out war. So we have a lot of news to get through today. This is what the European markets map is actually telling us. So there's a little bit of a divergence, or certainly stocks at the moment struggling for direction. A bit of a watchful tone, I guess, across some of the global markets before the Fed's interest rate decision. You can see the DAX and FTSE MIB practically unchanged. We're seeing a little bit of softness on the FTSE and the CAC 40. Now, the big question, we are expecting, of course, the Fed to cut for the first time in 5 years. By how much they will cut is what keeps investors awake at night. 25 or 50 basis points, you can see. For the moment, S&P futures practically flat in euro dollar 111.30. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacroix.
Well, good morning, everyone, and welcome to The Pulse. Happy Fed Day. It's a thing. I'm Francine Lacroix here in London. Now, the Fed widely expected to lower interest rates today after holding borrowing costs at a two-decade high for more than a year. Now, Ray Dalio of Bridgewater Associates and JP Morgan's chief executive, Jamie Dimon, had their say ahead of the big decision.
25 or 50, it doesn't make a difference. I think that's the problem with the news cycle and all of this. They're losing sense of the bigger picture. 25 basis points is going to be would be the right thing to do if you look at the whole picture as a whole. If you look at the mortgage situation, which is worse and that affects more people, then it's probably 50 basis points.
It matters to me because I have to listen to all that people yapping on TV all the time about something that's almost irrelevant. I mean, they're going to do it, 25, 50 basis points. It's not going to be earth-shattering. It doesn't mean that much. I mean, I think they need to do it. So I'm not, I think Jay Powell does do a great job, but it's a minor thing.
I feel seen. Joining us now is Christian Keller, head of economic research at Barclays. Christian, I mean, the wider things, right? I don't know whether it makes a difference. 25 or 50 basis points probably won't push the U.S. into a recession if they get it wrong. But actually, it's the tone. It's the data that they look at that the investors may be mismatching.
Yeah, I mean, let me say up front, I think it is correct that, the bigger picture, what matters in the last few months is we move from a world where most central banks are still very, concerned about inflation. That is gone, and we're more concerned about growth. So that's the first thing, and the Fed will start, and, the ECB already did, as did the Bank of England, etc. Now, calibrating how much you do is obviously something that has gotten people excited. Up front, we think it's going to be 25, and frankly, I think it's not only what they will do, but also what they should do.
Right.
If you look at communication before the blackout, Waller, Williams, everything pointed to 25. After the CPI print last week, markets felt very secure about 25. They priced 27 or so. And, then there came various news articles. And now we're having, I think, more than 50% priced, for 50. And it may be a situation where the Fed wants to push back, even though typically it doesn't. It likes to confirm what the market is pricing. This time, maybe a situation where they want to push back.
But, Christian, there have been a number of opportunities where actually the Fed kind of pushed back on a market narrative that inflation is fine, right? We could see a resurgence, especially with everything that's happening in geopolitics. We could see a resurgent inflation, and they cut by too much, and they'll be in trouble.
Yes, it's also about what's your signal. If you signal 50, and then remember, there will also be a new set of projections. And it's probably easier to do 25 and do that with a dovish signal rather than do 50 and then what people say will be a hawkish 50, but how will you justify that? What do you put in your projections? So I think that speaks for 25. And as you say, inflation for now, it looks clearly for the last few months went in the right direction. The last print showed that service price inflation is still, relatively sticky. Peak core PCE inflation we see at the end of the year at 2.7, and they probably will validate that today in their forecast.
But how much do you worry about the labor market, and how much do you worry about China as a force that could actually depress the world economy?
The labor market is now at the center, and there's been clearly a cooling in the number of jobs that are being created, and several, of the ratios you look at point towards cooling. But on the other hand, there has been a lot of labor supply. So one reason why the unemployment rate went up was a lot of additional labor supply through migration. And so we think the balance there is, as I said again, to do a 25 and to wait and see. China is important. China is slowing, and we see it now. We look at energy prices and general commodity prices, where China plays a very large role. Those are coming down because China demand is missing. They're trying to export their way out of this, which, given the size of their overcapacity, is actually a problem itself because others don't want to absorb all the exports. And what they do not do enough is stimulate their domestic demand.
Christian, overall, we're talking about a soft landing. And again, there's various definitions of a soft landing, but how hard is it for the Fed to really manage to engineer a soft landing?
Yeah, it is. It's very difficult for them. We think they have a good chance to do it, but ultimately it depends on many other factors than just the Fed. And, when we look at the trajectory of data so far, in particular the U.S. consumer, it looks still pretty healthy, and it was said earlier, that, mortgages are an issue, but mortgage rates actually have come down. If you look at it, financial conditions, if you look over the last few weeks, really, the dollar is weakened, the stock markets are up, mortgage rates are down. So actually, there's not a tightening of financial conditions overall. And we think as long as the consumer remains quite resilient, there's still net wealth added to the U.S. consumer's balance sheet. We think the Fed stands a good chance to actually engineer a soft landing.
We'll talk a little bit about some of the economic policies that have come up in the U.S. election a little bit later. But how does it actually change the way that you look at the economy? Is it literally one blueprint if we have Kamala Harris in the White House and another one for Donald Trump, and the world economy looks much different?
Well, the blueprints are certainly very different. And Harris versus Trump are almost, in some respects, very opposed policy approaches, right? Higher taxes, lower taxes. And then the question comes, what could they actually implement if there's a split Congress? And then it gets very, very difficult, and you have to kind of really weigh what is realistic. But the one thing that is realistic is the implementation of tariff hikes. And that's something that's high on Trump's agenda. And we did some calculations, and we think that would make a big impact if they were implemented as they say it.
All right, Christian, keep it there because we'll have plenty more from Christian Keller. From Barclays, we'll talk about the Bank of England, and we'll, of course, talk about oil. But UK inflation remaining steady at 2.2% in the year to August, and that was pretty much in line with analyst estimates, but below the Bank of England's forecast. That, therefore, paves the way for more interest rate cuts this year. Let's bring in Dan Hansen, our chief UK economist for Bloomberg Economics. So, Dan, what are you expecting? Could they actually cut tomorrow? And good morning.
Morning, Fran. I don't think they will cut tomorrow, no. I think there are a few things to take away from the print this morning. the headline services number, it did pick up, core did pick up, but if you look beneath the surface, it was driven by some volatile categories, particularly airfares. I think if you look beneath the surface, look at underlying measures of services inflation, there's probably enough in this for the bank to remain pretty much, send the same message that it sent in August, that more rate cuts are coming, but the pace is going to be pretty slow. So as of tomorrow, in terms of interest rates at least, we expect to hold. We expect the next cut in November. I think the big interest tomorrow will be in the quantitative tightening decision, how much the bank decides to reduce its balance sheet. We expect £100 billion reduction, which is the same as 2023. I think the risks are tilted towards a slightly bigger reduction in the balance sheet.
But Dan, I mean, and I know Governor Bailey always pushes back at this in press conference, but there is a gravitational pull from the Fed. So what does the Fed does, later today, does that influence the Bank of England tomorrow? We also have that big budget October 30th.
Yeah, I think to some extent, the bank will definitely have an eye on what the Fed's doing. But I think it goes to what Christian said around messaging. It depends what the Fed, if the Fed sort of signals there's something wrong with the US economy, then I think the bank will take notice. I always go back to 2001, where the US economy sort of went into recession. The Bank of England put in some insurance in terms of rate cuts. The UK economy didn't go into recession, but clearly what the global economy does matters for the UK because it's a small open economy. So yeah, definitely the Bailey and the bank will have an eye on what the Fed does, but I don't think at least the immediate term it's going to have an influence on what they do this week.
Dan, thanks so much. Dan Hansen there from Bloomberg Economics. And Christian, I mean, we look at the UK, and it's incredible, actually, the trajectory of growth over the last 6-7 months. I mean, we're in a much better position than we thought we would be. And the Bank of England, again, cut without much waves.
Yeah, I mean, and, so far things are moving as expected. I would fully agree with Dan. We don't expect they would do something next week. On tomorrow. Thursday. Yeah. on the tomorrow already. The Fed plays a role, but there's a budget. I think these political developments, we mentioned it in the US, but also, they probably want to see what the budget, whether there's any commotion around that. Inflation has been stubborn. That's why they're careful. If you think the last decision in August was still quite split. Yes. So to move from that to suddenly surprising the market with a cut would be quite something. We don't think that will happen. But, the big picture is the next meeting they will then cut. And we think then together with the ECB and the Fed, there will be a cutting cycle by the core central banks. That is really what matters.
But on the Bank of England, do we need to talk a lot more about the balance sheet? Because, again, that goes also to financial conditions in the country.
Yeah, that is, but again, it seems, he mentioned the 100 billion, that seems to be foreseen by everyone. So again, it's probably relatively little surprise there, which is probably what they want. You don't want to have any commotions in markets and any unexpected developments. But the balance sheet does matter, and let's see what they, how they will do some of the accounting procedures. That will be quite interesting.
Okay, Christian, thanks so much. Christian Keller, Head of Economics Research at Barclays, stays with us, and we'll talk also about oil. Coming up, Hezbollah points the finger at Israel after thousands of pagers exploded across Lebanon, leaving almost 3,000 injured. That story is next, and this is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Britain's next.
It was going to keep bringing World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Welcome back, everyone. Now, Hezbollah has accused Israel of orchestrating coordinated attacks in Lebanon, which killed several people and wounded almost 3,000. Now, pagers, which Hezbollah members have been using to communicate, exploded across the country yesterday afternoon. Well, yeah, Israel is yet to comment on the attacks. I'm now joined by Bloomberg anchor Jumana Barseche. Jumana, I mean, it's incredible just to understand exactly what happened. There have been a number of things said, you know, on the media, social media. Some of it hasn't been verified. What do we actually know?
Yeah, I mean, in terms of the reaction over here in the Middle East, people are still in shock as to what went down yesterday afternoon. What we do know is that around 3:30 p.m. local time, a series of explosions took place from these handheld pagers that were held by Hezbollah group members. So 2,800 people were injured, 9 people killed, including a child, according to the health ministry, and 200 people are in a critical condition. By the way, including the Iranian ambassador. The Iranian embassy tweeted a short while ago that his treatment is progressing well. He was indeed injured in that attack. Now, both Hezbollah and the Lebanese government were quick to point the finger at Israel. The Lebanese prime minister said that this was an attack on Lebanon's sovereignty, but Israel so far have declined to comment. There has not been an official response yet, but within Lebanon, this has placed the country on a high state of alert. There was a lot of chaos around the hospitals yesterday as the ambulances were flooding in. Many of the wounded would have lost their fingers. The casualties were targeted around their waist area, and so the repercussions are very broad, including the fact that an attack of this nature is unprecedented, both in terms of scale, but also in terms of how it was executed. And so what we're seeing now, Francine, is this new level of warfare. We've moved from a hot war to a cyber war.
So how could the pagers have been compromised?
And that is the million-dollar question. Many cybersecurity experts were looking into what happened yesterday. At Bloomberg ourselves, we reached out to the telecommunications minister of Lebanon, and he said that the cause would have been overheating batteries. Now, we put that question to experts, and they say that it is unlikely that an overheating battery could cause that much damage. What is more likely is that the devices themselves were tampered with at the point of manufacturing. And what we heard from this morning was from the Taiwanese manufacturer. It's become a national security issue in Taiwan as well. The government, the ministry putting out a statement saying that they did not manufacture these specific devices. And likely what happened is one of their distributors within Europe, they didn't say who exactly, would have somehow allowed for an interference to have taken place at the point of manufacturing these devices, and unclear again at this point how that would have happened. But what we do know is that explosive material would have been inserted into these pagers, say 10 grams to 20 grams worth, and military experts say that that would explain the explosions, the simultaneous explosions that took place yesterday would have been triggered by one message being sent to all of these devices. The other big question, Francine, is why Hezbollah operatives were using pagers in the first place. And this goes back to a directive from the commander-in-chief, Hassan Nasrallah, back in February. He told all of the group members to no longer rely on their mobile devices just in case they get intercepted. And so you fast forward to today, and of course, that is a decision that he no doubt regrets.
Jumana, thanks so much. Jumana Barseche there with the very latest, of course, on what's happening in the Middle East. We're back with Christian Keller, head of economics research at Barclays. Christian, I mean, this goes back to some of, I guess, you know, the questions that we were talking about, which is if there's an escalation of war, if there is something happening with the price of oil that for the moment has gone down, what does that mean for the global economy? It's very difficult to ignore these escalations, but it's not really translating into markets at all.
I mean, as an economist, if you look at oil price coming down, you wonder, is it supply, is it demand? At the moment, I think it's clearly a matter of a low demand and expectations for low demand, in particular because of China, which by now, not only for commodities, but also for oil, is really the key marginal country that is crucial for demand. So it's not a good sign. It means the global economy is slowing. I think it's also a sign, however, that the dependence on the Middle East for oil supply is coming down. Saudi is still very, very important, but probably markets see it isolated from this conflict. And then there's a lot of supply elsewhere, not least, by the way, from the US, which is, now energy independent. I think this makes this conflict very different from the classic Middle Eastern conflict in a way of the past.
I mean, it seems that if you look at geopolitics in general, it goes back to a couple of questions where it says, U.S. exceptionalism, does that remain intact? Some of the, I guess, industrial, policy wars, is that going to escalate? How much do these big questions actually impact on how you see the world economy in 2, 3, 5 years from now?
I think it impacts it a lot, and this is what clients ask as well. How should I think about inflation, about growth in a world that fragments further? And, we touched upon the question of Trump's proposal for tariff hikes. If they were to do what what his team in a way proposes, it would be a fundamental shift on the way how the U.S. looks at free trade and thereby how free trade will likely develop in the world. And, if you think the impact of, globalization, if you want to call it this way, on, goods deflation that we've seen for decades, on, the division of labor, etc. If you turn these things around, they have an impact. And they will be much more important than the question of how exactly will the Fed now calibrate their rate cuts today.
Right, but also because fiscal debt trajectories, be it the U.S. or elsewhere, just seem to be unsustainable. So what does it mean with what kind of economies we're left with? Is it a little bit too soon to find out what happens next fiscally for maybe politicians that don't want to take some of the difficult decisions now?
Yeah, I think that's a very important question. I think in the U.S., if you look at fiscal policy, and you look at the fact that none of the presidential candidates actually has any plan to reduce it. They're not talking about it. And in a moment of growth, in particular high nominal growth, which the U.S. still has, good real growth plus inflation, it doesn't seem to be a big question. There's a lot of liquidity still around. But we think ultimately this will come to a point where markets will care. And, probably risk premium at the longer end of the U.S. yield curve will have to increase.
All right, Christian, thanks so much, as always, for joining us. Christian Keller, their head of economics research at Barclays. Much more to come, and this is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
So as we were just discussing, oil prices edging lower as traders assess indications of higher U.S. crude stockpiles, sustain tensions in the Middle East, and the likely course of the Fed's rate path. Now, staying with oil, and tonight's episode of Leaders with Blackwell Goes Green features the former chief executive of BP, John Brown, who is known as the Sun King of the industry. Well, he spoke to me about the future of energy and why oil sanctions against Russia are proving ineffective and potentially dangerous for the environment.
Sanctions on oil really don't work unless the whole world is behind them, and they clearly weren't behind these. So people find ways around it. And one of the ways they find around it is to find ships that wouldn't necessarily be used to transport oil, or, you know, would have difficulty getting insurance, things like that, and fill them up and transport the oil. So inevitably, with this sort of activity, the risks of a spill have gone up. Surprisingly, to the best of my knowledge, there hasn't been one, but you know, the risks are there. The risks are always there. It's the biggest issue with oil is spills from tankers.
Do you worry about something like a big environmental disaster, or it's impossible to...
I do, but you can't, you know, there are so many different actors here, so many different actors, and when they're working outside the rules established internationally, anything can happen.
Well, you can see that full interview of Leaders with Blackwell Goes Green airing at 9:30 p.m. New York time tonight in the U.S. and at 6:30 p.m. on London time on Thursday. Coming up, Ursula von der Leyen's new team of EU commissioners face grilling by the European Parliament before they're confirmed. I'll be speaking to a French member of the European Parliament next, and this is Bloomberg.
Principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon and Sudan and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the parties. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The most eagerly anticipated Fed meeting in years. A cut appears certain, but by how much remains an open question. Google wins its latest court fight with the European Union over a €1.5 billion fine for thwarting competition for online ads. And Hezbollah accuses Israel of planting explosives in pagers that killed 11 people and wounded thousands more in Lebanon yesterday, increasing fears of an all-out war. Well, markets pricing a slightly higher than 50% chance of a half-point rate cut by the Fed today. Well, Bridgewater Associates founder Ray Dalio told Haslinda Amin the overall picture of the U.S. economy warrants a smaller move.
25 or 50, it doesn't make a difference. I think that's the problem with the news cycle and all of this. They're losing sense of the bigger picture. Okay, Fed policy. What does the Fed have to do? Fed has to keep interest rates high enough to satisfy the creditors, that they're going to get a real return without having them so high that the debtors have a problem. So now if we're looking at this, whether it's 25 or 50 basis points, 25 basis points is going to be would be the right thing to do if you look at the whole picture as a whole. If you look at the mortgage situation, which is worse and that affects more people, then it's probably 50 basis points.
What is the state of the U.S. economy? I mean, we're talking about 25 or 50 based on the assumptions of how the economy is doing.
Okay.
From the data that we've gotten so far, does it justify 50? I mean, what does it say?
We have a model for estimating what should be. The economy right now is very, very, very close to an equilibrium level in many ways if you're just looking at what is and you're not looking at the debt problem. And it would look like there should be a modest easing of interest rates and a move gradually to a more positively sloped yield curve, what we would call normal. It's fairly normal, except it's not normal in the way that it's so skewed.
Well, that's Bridgewater Associates founder Ray Dalio downplaying the prospect of a 50 basis point cut by the Federal Reserve today. Now, Google has won a court fight with the European Union over a €1.5 billion fine for thwarting competition for online ads. Now, some reprieve for the tech giant after losing a separate judgment last week from abusing its monopoly powers. Joining us with the latest is Oliver Crook in Berlin. Ollie, good morning. Run us through the details of the case.
Yeah, good morning, Francine. We've had such a litany of big cases out of Brussels over the last couple of weeks. The other two last week from Apple and Google really going the other direction. This one, a bit of reprieve, as you mentioned, from Google. This is really an antitrust case. This has to do with basically other third-party people like Microsoft and other companies basically not being able to get their advertisements shown in Google. The EU Commission said this is anti-competitive behavior. Google has said that there were a ton of issues with the case, that they were very unhappy with it. They also accused the EU of treating them as quasi-criminal in terms of the scale of the fines. And what we got from the EU General Court now is to overturn that decision so they will not have to pay that €1.5 billion fines. We should say, however, that this is not necessarily the final word. The final word is the European Court of Justice. We should say that in the tax situation that we had last week with Apple, where they were forced to pay €14 billion, this very same court had reversed it. Which means it then went to the European Court and it was then upheld. So this may not be the end, but a bit of reprieve. And for Margareta Vestager, just another one of the many cases that she brought through her long career, which ends, by the way, very soon.
Ollie, staying with the EU, Ursula von der Leyen has proposed her top jobs for the European Commission. So where does the real power of the next group actually lie?
Yeah, so the real power lies, I think, mostly with Spain, I think is what is the answer to that. So you have the role that was given to Spain to the commissioner there was both competition and competitiveness. So both the Vestager role that we've just been talking about, this is one of the most fundamental, one of the most powerful roles within all of Europe because it has a really big stick. As we talked about just now, this is the role that can impose billions and billions of euros worth of fines. What she has now added to this commission is also the competitiveness element, the sort of anchor to the Draghi report and trying to execute that and execute it in a sort of carbon neutral way. So this is an absolutely huge commission. It was very important for Ursula von der Leyen to put women in places of extreme power within this commission. We should also say that Séjourné, who's also getting a portfolio that is akin to this, really focused on the new industrial policy and competitiveness. He'll be overseeing things like the Capital Markets Union. So these two commissioners together will really be sort of serving as, Francine, if we may allow ourselves, the sort of Draghi commission of trying to execute this plan for European competitiveness.
Yes, so many questions to follow up on. Ollie, a terrific briefing as always. Thank you so much. Oliver Kirk there in Berlin. Coming up, 25 or 50? That's the question everyone is asking about the Fed decision today. So we'll look ahead to that next. And this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg. Now, the European Commission President Ursula von der Leyen has drawn the battle lines for her second term in office, unveiling a top team which she hopes will make the EU more competitive. The new lineup includes key roles for commissioners from France, Spain and Italy, though they face hearings in the European Parliament before they're actually confirmed. Well, I'm delighted to be joined from Strasbourg by the French MEP, Stéphanie Yoncourtin, a member of the Renew Europe group. So thank you so much for joining us. There are many, many questions on, for example, France's Stéphane Séjourné. He seems to have been getting quite a big role in this new commission. How important is this new enlarged role to the interests of France?
Well, thank you very much for having me. And yes, of course, I mean, Stéphane Séjourné will have has got a huge portfolio, and this comes at a crucial time in the EU, and it's very important to carry on building what we've done so far and what we've achieved during the past mandate. So we already moved mountains, And we placed Europe already at the forefront of digital regulation and more sovereign Europe in areas like health and defense, especially during the pandemic and in support to Ukraine. And of course, we've got massive challenges ahead. And Europe strengthened its autonomy from big techs with groundbreaking legislation. It's now time to deliver, to implement the regulations. And so Stéphane Séjourné will definitely have a key role in that respect.
But the EU is under really a lot of pressure to boost competitiveness to face the US and China. What do you think needs to be done urgently?
Well, we have, as I said, massive issues ahead of us, and to name a few. I mean, first, transitions are very important. We need to deliver. Deliver means investing a lot, and it requires money. Public money is rare, and we will need to have the second leg when it comes to creating basically the capital markets union, which will be one of my top priority, meaning making sure that we are fit for assuming this transition. Competition rules also, you're just talking about the last antitrust fine against Google. It's clear that Europe can no longer operate with obsolete frameworks, and we need to revisit this. This will be important. Third, industrialization, and also, as I said, within that, at the core of it, financing. And financing needs have never been higher, 800 billion euros per year, according to Mario Draghi's report. So key role for Stéphane Séjourné and for the next European Commission.
I mean, we saw the Draghi report. Do you think Mr. Draghi is being way too dramatic when he says, look, the EU risks unraveling if it doesn't push through with what he said? Would you, for example, move forward with joint debt?
Well, it wasn't too dramatic. I think his diagnosis is unanimously shared and is realistic. It's, I would say, now or never. And so first, we, of course, need to boost EU innovation. And we need to, as I said, figure out how to finance. The common debt is one thing, but also what we need to do is, as I said, mobilize private money and making sure we have a more fluid, a more harmonized capital markets union. It means that we need to up our CMU game, I would say, and mobilizing private capital means many things. And for example, I'm now working on a retail investment strategy, which would help to kind of reallocate massive savings of European citizens to kind of invest in the real economy, in SMEs, in companies, to make sure we have a more dynamic market leading to more competitiveness and prosperity.
But if you look at the amount of money, and I understand you want to capitalize private money, but the amount of money that Professor Draghi is talking about is to the tune of 800 billion a year. Where do the countries find that kind of money?
Well, as I said, I mean, public money is rare, and so we need to find fresh money and make sure that the markets follow us. And as I said, I mean, since the COVID pandemic, but not only, you know, in EU, there's a tradition of savings, massive savings from the European citizens, and it's now very important to make them invest more on risky but more interesting investments and markets, to make sure that we have this fresh money to be able to have this fresh money to finance the green transition, the digital transition, but also defense in Europe and many other challenges ahead.
So in France, the budget deficit and ballooning debt is definitely a cause for concern. We have a new prime minister, and he's taking his time to actually come up with a new government. Do you worry that there's going to be austerity measures in France, even though there's a risk of a no-confidence vote against Prime Minister Barnier?
Well, the thing is, in France, we need also to, strike this balance between making sure that we reduce this huge and massive debt and deficit, that we cannot afford because otherwise we will pass it on to the next future generation. And at the same time, making sure that we invest in prosperous, in technological markets and sectors as well. So now, I mean, I wouldn't speak about austerity measures. I would speak more, as I said, on responsibility, accountability to people. And I mean, it's a really hard task, I know, for the new Prime Minister. And I hope everybody will be, you know, on board and responsible to make sure that we find, at the end of the day, the right method to enter into a more reasonable budget for France and for Europe as well, because as you know, France is a key member state in the EU within these 27 member states.
I mean, it's a very it feels like a very delicate time politically for, you know, world leaders, but especially European leaders. Why do you think the European project is losing so much attraction for EU leaders?
Well, for many years, you know, Europe has always been seen as responsible of all the issues and all the problems. Now, Europe has a huge part of solutions, and I think I wouldn't say that Europe is losing credibility or grants or interest, because I mean, if you look at Michel Barnier's credentials, I mean, he's a very European man, I would say. He has negotiating the Brexit. He used to be commissioner. He's well known, and you know, I think his nomination in France is just showing that Europe is very important for France, and France is important for Europe, and that Europe is kind of regaining grants and credibility within France. And this is very important because there are many, as I said, many challenges ahead, and many of the challenges cannot be dealt nationally. And the best level ever is Europe. And I think people tend to understand that. So I think Michel Barnier and also Stéphane Séjourné, who knows very well I would say the European machine, are very important and are very key actors in that respect. And of course, we now need to find the right method, which is, you know, the method of compromising, which is somehow very difficult in France, because we used to have this culture of two pillars parties, right, left. And I think Emmanuel Macron, in this way, helped a lot in changing the mind and the methodology. It's now time, given the high difficulties we face in France, to sit all together and to work in a method where we dialogue, we negotiate, where we find a compromise. Otherwise, it's going to be devastating, really, for France, for Europe, and for the whole world.
Stephanie, thank you so much for joining us. Stephanie Young-Courtin, member of the European Parliament, of course, joining us on a very important week for Europe. Now, we turn our attention to the U.S. as traders weigh just how big the Fed go with a rate cut today. Joining us now for more on this is Bloomberg's Ven Ram on the MLive team. Ven, 25 or 50? I don't know if there's anything to convince you otherwise.
Well, the markets are pricing 60% chance of a move higher than 25 basis points. But I think it's going to be an extremely finely balanced act for Powell. On the one hand, at Jackson Hole, we saw that he was extremely dovish. And also, he's concerned about falling behind the curve. So I think that, you know, a 50 basis point cut isn't an unlikely scenario. But on the other hand, the Fed under Powell has been a consensus-driven beast, which means that he has got to go around and find consensus among the members to shoehorn in a 50 basis point move, which I don't know whether he had it. And the other message that a 50 basis point cut will send is one of alarm that the Fed is behind the curve. So it's going to be a finely balanced act. Regardless, it's going to be the dot plot that the markets will move on to quickly pivot to.
So, Ven, what can you tell us about dollar? You know, is a further dollar drop going to be limited?
Well, I think that the dollar has plunged 5% so far this quarter, which I think is a bit of an overstated drop, because the dollar is right to factor in the weakness that in the real rates that we are going to see once the Fed starts going. And I think that, at present conditions, the dollar is fairly valued. And I think that, if we are going to see a modest correction upward in the dollar, after the drop that we have seen this quarter, especially if the Fed's dot plot is not as dovish as the markets are expecting.
Ven, when you look at some of, I know then we go on to BOJ. It doesn't get more exciting than this when it comes to central banks. How much focus will you have on the yen carry trade?
Well, I think that, we are going to hear from UEDA this Friday that, look, the BOJ is going to raise rates if the Japanese economy evolves according to forecasts. And certainly what we have seen is that inflation is firm, the economy is ticking modestly higher, the very conditions that the BOJ wants to see fulfilled. So if that happens, I think that the markets are kind of remarkably complacent as to how far the BOJ can go here. We had a BOJ speaker earlier this month outlining the possibility of a neutral rate being 1%. The markets are not positioned for it at all, which means that the yen has plenty of scope to go higher from here.
Ven, thank you, as always, for joining us. Bloomberg M Live's Ven Ram. Now, coming up later, a Bloomberg surveillance special, The Fed Decides. You can catch that 6:30 p.m. London time. Coming up, BlackRock teams up with Microsoft to raise billions for AI investments as they look to bankroll the huge demand for data centers and new energy. We have the details next, and this is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Well, BlackRock and Microsoft are teaming up on one of the biggest efforts to bankroll the building of data centers and energy infrastructure pivotal to the AI boom. Now, the companies will seek $30 billion of private equity capital with the aim of leveraging the money to bring in as much as $100 billion in potential investments. So let's discuss all of this with Tom Metcalf, Bloomberg's managing editor for finance and investing in EMEA. I mean, it feels, thank you, Tom, for joining us. I mean, it's huge. This feels similar to what we heard Brookfield do with Microsoft, but this was on the energy transition. I mean, what are these new deals? There's like many stakeholders, many shareholders, and it's just to be able to build things.
Yeah, exactly. I think it's just a sign of just how much capital is needed, right? Like, say, 30 billion effective equity here. You know, even companies like a Microsoft or a BlackRock are not going to get that themselves. And I found some of that wording you just brought up quite interesting. You know, we'll seek 30 billion of private sort of equity money, private capital. And I think that's probably a sign of what this partnership is looking to do. You know, around the world, you've got Microsoft on the West Coast, BlackRock on the East Coast, obviously the Middle East, Eastern unit, I think, from Abu Dhabi. And it looks like they'll be, you know, probably, you know, working those Rolodexes to make sure they hit that 30 billion. And as you say, leverage that up, and then they've got 100 billion with which to make investments. And that's why you see these kind of interesting structures, a bit more complex than usual, just because of the sheer amount of money that they think is needed to, you know, power the AI sort of revolution.
So what do we know about Microsoft's role in this? Because so BlackRock is basically going, they have the contacts, they have the private equity, you know, experts, they're asset managers, so they're raising the funds, maybe putting some of their money in. What's Microsoft's role?
I think Microsoft, in part, I'm sure Microsoft will put in quite a bit of money as well, but also their expertise, right? You know, they are the ones on the front line of the AOL, one of the big companies in it, and obviously have those connections with OpenAI as well. So, and I think that's what you need in something like AI, right? You need to have a sort of trusted partner who is, you know, putting their money where their mouth is, but critically going, this is sort of technology that makes sense to us. And then, yeah, in the Middle East, I suspect, you know, MGX's role is bringing that sovereign wealth, that very patient capital, and the kind of investors that, you know, literally can write, you know, 10-figure checks, perhaps.
Yeah. I mean, it makes sense. It's kind of like almost brand recognition, right? I know who I want to invest with. It's like two names that I trust in finding the right infrastructure for AI.
Yeah, exactly. I mean, you look at the expertise everyone's bringing, right? You know, that is very reassuring to have a BlackRock in the mix, just as Microsoft's AI skills are. And similarly, on the sovereign wealth front side, you want someone who, you know, moves in those circles and is genuinely in that space. So it's kind of interesting. You know, we're just starting to see these models, these structures develop, and they do make a lot of sense. But I guess on the flip side, you're looking for sort of the downside. There is that extra complexity. You know, I love simplicity. I like one company, one name, and instead here you're going to have lots of stakeholders. So it'll be interesting to see how it goes.
So interesting. Tom, thank you so much. Tom Metcalf there with the very latest on this new deal. Up next, Bloomberg Brief, Danny Berger in New York, and this is Bloomberg.
biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? Is it just based on the past or the projection of the future, or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Good morning from our global headquarters in New York. I'm Danny Berger, Manus Cranny on assignment. Welcome to Bloomberg Brief. Let's set your agenda. It's decision day. Investors are split over the size of easing. Markets price in even odds of a half-point cut by the Fed. Middle East tensions, thousands of pagers in Lebanon explode, killing several. Hezbollah points the finger at Israel. And as we count down to Powell, we'll catch up with Adam Posen, president of the Peterson Institute, later this hour. It is the 25 versus 50 debate. It is just over even odds that the Fed goes by 50. Quite the change from just a few weeks ago off communication, supposedly from different outlets. I think we'll all be happy when this decision, 2 p.m., is over and done with. We had stronger data yesterday, both retail sales and industrial production, that helped to lift yields only by 5 basis points, but didn't change the odds of what the Fed will do. We're higher by 1 basis point this morning on your 2-year yield. 3.6% is where we stand. Also, when the stronger data came in at 1 point briefly, in this market, we reach another intraday all-time high for the S&P 500. It's somewhat abated. We ended little change on the day. The equal weighted measure of stocks, so did finish at another all-time record. S&P 500 futures little change this morning. Euro versus the dollar, that is stronger this morning, up by 1.1%, up by 0.1%. Euro stronger versus the dollar. That is Jim Reed of Deutsche Bank writes that for risk assets, this has been the strongest rally going in to a rate-cutting cycle since 1957. Well, Kit Jukes of SocGen looks beyond that pivotal decision again at 2 p.m. He rates the falling. While the pace of cuts priced into the coming few months seem out of line with the so far modest slowdown in the pace of economic growth, the bigger question is where the destination of Fed funds is, rather than where they start with a hawkish 25 basis points or a dovish 50 basis point one. Kit, I'm pleased to say, joins us now. He's the chief FX strategist at SocGen. Kit, I love this because I'm tired of this debate. I want to look beyond it, and that's exactly what you are doing. So why does the destination rather than the journey matter?
All right, narrowly in the foreign exchange market, the destination matters for where the dollar ends up. In other words, the lower the destination, the weaker the dollar will ultimately get. Though, you know, the current main foreign exchange driver is just that the market was so long of a dollar that went up so much that people are hedging their dollar exposures, and it's going down from a great height. But I think the destination matters in that sense. And the destination is important because there's been an assumption during this economic cycle that we're not going back to the kind of the 1% lows or the 0% lows that we've seen in the last few cycles. We'll go to a higher neutral rate. I think that's probably true, but it gets sort of bandied around by lots of people. We're never going to buy that. We're never going to buy that. We'll go to 3. We'll go to 2.5. Never going lower. And I think that is we're going to question that, doubt that, have angst over that as this cycle progresses, as the rate cutting cycle progresses. Whether we get to a lower low, I think depends on how softly the U.S. economy is going to land. So far, it's if this was a plane, it's looking like it's coming in for a nice smooth landing. But there's still. We're still in the air, and it's not a soft landing until you've landed.
All right, but Powell's been really hesitant, as have most Fed speakers, to talk about what neutral is, where they want to go. What do you expect from communication from Powell? What's realistic in guiding the market to what the destination might be?
Well, I think we'll get guidance today in terms of what we should expect for the rest of this year, so for the coming months. So not where we'll be in 2-3 years down the road, but I think we will get guidance. I mean, given the backdrop of this 50-25 debate, I think that's important. In other words, if we're going to get a message of, broadly speaking, we're going to get 3 rate cuts, 25 basis points each between now and the end of the year in the 3 meetings we have, then I'm not sure I care whether it's a 50 and a 25 and a hold, or some or 325s. That message is the important one. That's the pace you're trying to indicate, and possibly in that sense lean back a little bit against what the market's pricing in there. But the further out projections of where long-term dots are and things like that, I think those are important for us in the comments and in coming months to see how the Fed wants to steer expectations about where we're going to end up, because I think we haven't had enough of a debate around that yet.
Well, to the point of your first answer, Kit, because the market has come around to this idea of 50, you have seen weakness from the dollar. Euro dollar, I showed it just moments ago, it's at 111. At one point, dollar versus the yen broke through 140. What looks the most mispriced to you with this conversation, with this concentration on 50 basis points worth of cuts?
Look, the most interest rate sensitive currency in the world right now, and they're all much more sensitive to short-term rates than they usually are, but is clearly the Japanese yen, and so that's going to probably react pretty sort of straight line in terms of what happens. I think everything will react, but again, if I had to describe the sensitivities of currencies to 50-25, the starting point is they're more sensitive to where rates are expected to be in a couple of years down the road than they are to this meeting. So the commentary that goes around it from the Fed can make a huge amount of difference, and potentially prevent the danger that if they only do 25 after all this hullabaloo, that the dollar sort of spikes back up and risk assets sell off, and we all get kind of angsty about the whole thing, which would make me just puzzled, frankly. So I think that's why I think that what Jay Powell says and how he indicates what the path is. To take away this debate about the 50-25 today, once we know what it is, I think that's actually quite important, just to get a calmer reaction. Certainly, I can't see that anybody's helped by, triggering a violent short covering in the dollar at this particular point in the cycle.
What does it mean, though, if it is a more aggressive pace of cuts, to have the ECB just going 25, you have a BOE that's largely expected to hold tomorrow, you have Brazil talking about hiking rates now. What does it mean to have a U.S. that's kind of going at it alone this time?
Well, I mean, going at it alone, yeah. I mean, that's a sort of a problem that the Fed didn't go in July, and now they're going now. The ECB has gone, so we're just a little bit out of line with each other. It shouldn't make an enormous difference. Again, if you manage the expectations about the path, and if everybody's doing so. Now, we know the ECB is going again this year, or we think we do. We think we know the Bank of England's going this year. We just don't think this is the month that's going to happen. As long as you can, as policymakers guide the market, I think that's okay. I don't think the big danger is you accelerate the fall in the dollar. I think at this point, only because it's come down quite quickly, quite a long way already, that I think it's. What you don't want to do, in fact, is trigger just disorderly moves. So, yeah, central banks can't always be in sync, all moving together on the same month. That would seem odd, but they do need to get the focus more on the medium-term path rather than the minutiae of each meeting. We're all in easing mode. The global economy has slowed down. Inflation is coming down, and we're not going to do it quite at the same pace. The noise around, say, 50 basis point moves doesn't help.
Kit, we're also going to get a BOJ decision at the end of the week. I know you are excellent at keeping track of positioning in this market. The BIS quarterly, which I also know you looked at, basically said that the carry trade isn't over yet, specifically hedge funds and those who borrow money internationally. What did you make of that and the danger that this still poses to greater markets?
I think it's true. Look, the kind of the fastest money was out really quickly. Okay, so I don't know. The hedge fund trader who was selling dollar-yen puts to buy calls in the most leveraged version of how you traded the rising. He left. On the 1st of August if he wasn't already gone. Why would he do that? The real money, long-term investors are slower, and everybody else is slower after that. And so there will still be some positioning. I think at this point, you ought to get fewer disorderly moves. I thought it was comforting dollar yen went through 140 and bounced back. I don't think it's in Japan's interest for dollar yen to go to 120 in the next few months. That'll disinflate them pretty fast. So I thought the BIS was an interesting and a good analysis of where we are. It didn't alarm me. It did leave me thinking, at 140, whatever we are, do I think 160 or 120 will be seen next? I think we'll eventually see 120. I don't think it has to be disorderly from here.
That's good news. Kit, you're one of the best. Great talking to you this morning. Kit Jukes of SocGen. Okay, let's get to some other top stories now that are trending on the terminal this morning. Hezbollah has accused Israel of orchestrating an attack that killed several people and wounded almost 3,000 across Lebanon yesterday. Israel didn't comment on the events, which injured hundreds of members of the Iran-backed militant group. The incident raises fears of an all-out war between Israel and Hezbollah. It's the end of an era. Steve Cohen is stepping away from the trading floor. The billionaire founder, Point72, will no longer be investing clients' money. He will instead focus on driving growth at the hedge fund and mentoring talent. He will remain as the firm's co-CIO. A Novo Nordisk executive says Ozempic is very likely to be one of the next drugs targeted for a cut under the Medicare program. 10 of the world's biggest medicines already saw prices slashed under the Inflation Reduction Act. The current list price for Ozempic in the U.S. is about $970 a month and is covered by most Medicare plans for type 2 diabetes. Coming up, Nippon Steel has more time to try and take over U.S. Steel. We're going to have that next for you. And later in the hour, we're going to count down to the Fed with Adam Posen of the Peterson Institute on why a 50 basis point cut would be a mistake. All that to come on your brief.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
This is Bloomberg Brief. I'm Danny Berger in New York. Republican presidential candidate Donald Trump vows to revive SALT, the state and local tax break that had been popular among New York taxpayers. The former president capped the tax break during his time in the White House. For more on this, let's bring in Bloomberg's Anne-Marie Hordern. Anne-Marie, I mean, this was Trump's policy to limit the tax SALT deductions. So why the possible backtrack?
Right, and we've already heard from people like Senator Schumer, who I spoke to recently at the DNC, saying they want to make sure that they sunset that cap. This is a pure play, really, I think, for New York, and not really for Trump. No one thinks that Trump is going to win New York State, but potentially very swing district on Long Island, where he's going to be speaking tonight. This is New York 4. It's currently heard by Congressman Anthony D'Esposito. He's in a very tight race. He's one of the individuals that won in 2022 during the midterms that flipped the House red. So now Trump is coming out and saying that he wants to work across the aisle, work with the New York governor, I guess, work with Democratic senators. Remember, the SALT cap really penalizes blue states. It would help in places like New York, California, and Illinois.
So what, it's more of a down ballot play? Is that kind of what you're saying, to help senators, representatives?
Well, I think what you see in this election, whether you're looking at Kamala Harris's campaign or Donald Trump's campaign, is what I call an Oprah Winfrey election in terms of everyone seems to be willing to get a tax cut. It seems that everything is under negotiation. But right now, these are just campaign ideas. Depending on the composition of Congress and also who is in the White House, we'll have a clearer picture on how this tax fight is really going to go down. But regardless, there will be a tax fight next year because the Trump-era tax cuts, they will be sunsetting. A lot of those provisions will be sunsetting by the end of 2025.
One policy that they're seemingly not trying to tackle now but kick down the can is U.S. Steel and Nippon Steel are reporting, people familiar, you and the team, talking to people familiar, saying that they're going to push the deadline for this essential application until after the election. What's the thinking behind it?
So basically, this restarts the clock for CFIUS to review Nippon Steel's acquisition, this $14 billion acquisition they want for U.S. Steel. So politically, this means that kicking the can down the road, as you say, we will likely not see a decision then before November 5th. And this becomes really political because the fact that Kamala Harris and Donald Trump are both spending a ton of time, a ton of money. Pennsylvania is a must-win for the Harris campaign. President Biden has come out and said it should remain domestically owned, and President Trump said in February that he would outright block this deal. But parking the politics aside, how CFIUS works, and there's been a lot of reporting that individuals from the State Department and individuals from the Department of Defense don't agree right now on the national security concerns or view it differently. So the tea leaves is that there's no consensus yet on CFIUS. And also, if they extend this review and give Nippon Steel more time, if there was to be a legal battle, potentially the blow wouldn't be as harsh in the sense that they gave Nippon Steel another 90 days to come back.
Anne-Marie, thank you so much. You can catch Anne-Marie on surveillance in just an hour's time, Anne-Marie Hordern. Okay, coming up, Google wins its fight with the EU over $1.7 billion fine. That's up next.
The top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp-up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges. Was elected.
Was going to keep reading World Cup. This is a three.
As the economic picture
Covering the intersections of Hollywood, Silicon Valley, and beyond.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
It's your Bloomberg Brief. I'm Danny Berger in New York. Google has won its fight with the European Union over a $1.7 billion fine. The EU's antitrust regulator had imposed the fine after finding that Google abused its dominance via its AdSense advertising service. Bloomberg's Oliver Crook joins us in Berlin on this. Oliver, there had been a lot of fights with Google, with other big tech and the EU. What does a win mean for Google in this case?
Yeah, so they're back in court this week. And reminder, just last week we had some verdicts coming from the European Court of Justice going in the other direction, both for Apple and for Google, to the tune of $14 billion for Apple and something close to $2.5 billion for Google. Now you get a bit of reprieve there in the European General Court. Basically, this was a case about it being very difficult for third parties to advertising to come up on Google search. The EU Commission said this is anti-competitive. This has now been struck down. And Google was really sort of explosive in their language on this. They were saying that basically the EU was using quasi-criminal level fines against them. It was way out of proportion, saying that the case had a ton of holes in it. But we should say that this is the European General Court. This is not the final word on this matter. The ones that we got from last year were at the highest court of Europe, the European Court of Justice. This could still go there. But again, a bit of reprieve from big tech out of Brussels this week.
Well, we know the EU antitrust chief, Margrethe Vestager, has piled on billions and billions of fines on some of these U.S. tech companies. But with her second term almost over, what could a new regime, what could a new antitrust chief mean for some of these companies?
Yeah, Danny, this is really interesting. So Margrethe Vestager has nailed about $10 billion worth of fines towards Google. It's closer to $20 billion when you think about Apple, and she is now ending her second term. So this is really monumental. This is one of the most important and powerful roles within Europe. And we got from Ursula von der Leyen the name of the person who will be replacing her. So this is a name you might want to familiarize yourself with. That is Teresa Ribera. She comes from Spain. She is now heading the Competition Commission. What is also interesting, Danny, is that von der Leyen has also combined both the anti-competitive part of the commission with the pro-competitive, i.e. the sort of antitrust side of things and sort of regulating big tech, with how to make Europe more competitive and how to build and develop their own kind of big tech companies. So there's a balancing act there. We should also say that as Vestager leaves and you get the new person in, there are now new tools that exist that did not exist for Vestager under any of these lawsuits that we've been talking about the last 2 weeks. The Digital Markets Act, that is now a tool that Ribera will have to work with as she thinks about this. And by the way, Vestager, on her way out, she spoke to the FT this week saying that basically as she ends those two terms, really warning against dialing back that regulation, because once you open that Pandora's box and these tech companies get a foothold within Europe, there is no closing it.
Oliver, we appreciate it. Bloomberg's Oliver Crook. Now, in another corporate win, BlackRock and Microsoft are teaming up on one of the biggest efforts to bankroll the building of data centers and energy infrastructure, things that are pivotal to the AI boom. And the companies will seek $30 billion of private equity capital rather. The money will then be leveraged to as much as $100 billion in potential investments. Bloomberg's Tom Metcalf joins us for more. Tom, just what are the details of this? I mean, it's a lot of money and some very large companies.
Yeah, there's a lot of money, large companies, and it's one of those fascinating structures, which I think speaks to just how much money they're looking to deploy. So this is going to be a partnership between, these household names, right? Microsoft, BlackRock, and then over in Abu Dhabi, MGX, which, is basically going to be a conduit for, I assume, a huge amount of sort of sovereign wealth from that region. And it's really interesting to me, that wording you picked up about, they're seeking to, deploy basically 30 billion of private equity money, which suggests to me is not going to be just these three putting together the 30 billion. They're going out there, they're seeking investors, they're seeking shareholders, which again speaks to just the enormous amount of money they're looking to get into this thing.
Yeah, and I'm curious if it does something to sort of like revive the AI trade in public markets, which has been languishing. Tom, I spoke to Apollo after they backed Intel in a big way in terms of getting a data center up and running. Microsoft and Brookfield, they've also signed the biggest clean power deal earlier this year. In talking to these folks, you get the idea that there's not even enough money out there in the world to finance the kind of changes that are needed for AI and clean power. So how are these firms thinking about financing what's going to be the future and what many places are behind on?
Yeah, I think that's the sort of fascinating thing about this trend is just the sheer sort of absolute figures involved, and that is why, in terms of how they can find the money, they need to partner with people. Once upon a time, right, Microsoft would have probably just done this solo, perhaps. But now, they need to get that money from Wall Street, hence BlackRock. They need to get that sovereign wealth money as well, hence MGX, the Abu Dhabi vehicle. So, and I think it speaks to, it's not just AI, right? It's all these big transitions, as you say, the climate transition, the energy transition. We're talking billions, and you had Draghi coming out and say, we're looking for 800 billion, of investments. And really, the only way the private markets can get involved is obviously by looking far and wide for that, tapping as many investors as they can, and also, one would suspect having some government sort of support in some way.
Yeah, a la, Inflation Reduction Act in the U.S. Tom, thank you so much for that. That is Bloomberg's Tom McKenzie. A quick check on your bond markets this morning as we're just, 7, 8 hours, 9 hours away from the Fed decision. 2 p.m. is your time. I can't do mental math this morning, apparently. Yields are higher across the curve by as much as 1.8 basis points for your 10-year yield. On the front end, they drifted higher by 5 basis points yesterday. After stronger retail sales data and production data, still expectations for a 50 basis point cut are more than 50%. Coming up, we're going to catch up with Peterson Institute's Adam Posen on just that. He says a 50 basis point cut by the Fed would be a big mistake. We're going to break it down coming up on Bloomberg Brief. Stay with us.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger. Manish Cranny is on assignment. Let's set your agenda. It's decision day. Investors are split over the size of easing. Markets price in even odds of a half-point cut by the Fed. Middle East tensions, thousands of pagers in Lebanon explode, killing several. Hezbollah points the finger at Israel. And as we count down to Powell, we're going to catch up with Adam Posen, president of the Peterson Institute, just minutes away. First, a quick check on your markets this morning. It is the 25 versus 50 debate. We are over just even odds for 50 basis points of a cut, which means congratulations, Fed. You will surprise the market either way you go. Stronger retail sales data and production led to 2 years ending the session by about 5 basis points higher. A little change this morning, up by 1 basis point. Meanwhile, equity futures are up 0.1%. At one point yesterday, we reached an intraday high. It ended the session little change, though the equal-weighted version of the S&P 500 did end at another all-time record. Meanwhile, your euro versus the dollar, that is stronger, 0.2%. 1.11 is where we stand on euro versus the dollar. So yes, it is 25 versus 50. I'm sure some people are looking forward to having that settled later today. Here's what some of the biggest market voices are saying about that debate.
25, 50 basis points. 25 or 50. 25 or 50. It doesn't make a difference. It's not going to be earth-shattering.
They're a long way from neutral, but I don't think they're going to do 50.
They're losing sense of the bigger picture. 25 basis points is going to be would be the right thing to do.
If they do 25, they'll lather it on pretty quick that they're going to do more later.
I always say we have a crystal ball, and at the end of the day, we'll see what the market does.
Let's add another brilliant voice to that mix. Adam Posen of the Peterson Institute writes the following. If they go 50 instead of 25, is it a big mistake? Probably not in terms of short-term damage to the economic outlook, but it does further undermine the Fed's communication. As you saw, Adam is with us now. Adam, thank you so much for joining this morning. So let's start there. Why is going 50 an issue of credibility?
I think, Danny, thanks for having me, and Fed Day. I think what's going on is we're seeing the culmination of months of the Fed shortening and shortening and narrowing the justifications they use for their decisions. So we've gone from a world where they were talking about a 2-year ahead forecast, which is what inflation targets generally do, and talking about multiple factors, to a world where in Chair Powell's Jackson Hole speech, he was talking just about the unemployment rate and just about the real Fed funds rate and just about the next 3 months. And so then you become what former Bank of England Governor Mervyn King used to call a hostage to fortune. So we got a unemployment number that came down last month. And even though it was totally expected that it would come down last month, everybody's like, oh, does that mean the Fed's changing? Does that mean the Fed's doing this? Does that mean the Fed's doing that? It never should have been so dependent on one piece of data. And so I don't understand all the drama, but I do understand that whether they do 25 or 50, the real problem is going to be how they say contingently, depending on how the economy goes, what are we going to do? Whereas what they keep saying is they're basically locked in, which I think is a mistake.
So what do you want to hear from Powell today, Adam, then, to clear some of this up, to get to the kind of scenario that you're talking about?
I don't think realistically we're going to hear it from him today. I think it needs the committee changing the dots or making a broader statement that, or having Powell read out a broader statement, which is not going to happen. And if they just say data dependence, that doesn't help, because the point is we don't know, or the Fed doesn't know, whether the monetary policy really is that tight. A lot of people are saying they're a long way from neutral. Well, they're a long way from neutral, but credit conditions are pretty darn easy, especially after the Fed raised 500 basis points. And the fact is, R-star, which is the benchmark, the abstract, unmeasurable benchmark for where policy should be in a full employment economy, has probably gone up. So the Fed policy is probably not that tight. At the same time, there are a lot of things going on in the labor market that are not just captured in the unemployment rate. So they would have to go out and go back to something like the way Yellen used to talk about a labor market dashboard, instead of just saying unemployment rate's going up.
To that point, you have a credit market that is still, spreads are really tight, as you mentioned. You have equity markets just around an all-time high. Just to get to the 50 basis point thing, the last few times we've had this, it was COVID, it was a credit market implosion, it was a stock market implosion, 2001, 2007, 2020. Does it set some different sort of precedent of what it means to do a big-sized cut? If that's what they do this time, is it a different transmission mechanism and response mechanism, rather, that we're dealing with from this Fed?
You're absolutely right, Danny. They would mean a different context, at least, and a different conditionality for what takes a big cut. Now, it's perfectly fair to say they raised rapidly so they can cut rapidly. There shouldn't be an asymmetry, but that means they have confidence in their forecast that they're pretty sure they need to cut a lot and quickly, and they haven't communicated that. And I don't think that's the right forecast, frankly. It might be right. I think you can argue this risk management, that inflation is on a downward path for the moment, and so the relative risk of being wrong on a recession versus wrong on inflation goes the way of cutting. But that's a different statement than saying, oh my God, we have to get cutting and we have to lock in the expectations that a year from now we're going to be down 200 basis points. And that's where I think the real problem is. They're so focused on the short term when there's no clear proximate cause of short-term problem, like you just said, which usually is the justification for a big, fast move.
I was going to say, Adam, is it a problem that we're even having this debate, that we're coming through a past couple days where we're talking about reading tea leaves from Colby Smith and Nick Timmeros, that we're trying to decipher things like retail sales to get an idea? Is it a problem that we're even at this point to begin with?
I think it's a reflection of an underlying problem. I mean, my personal forecast is they're going to do 25, and these news stories are going to turn out to have just been speculative news stories. We'll see. But the fact is, there shouldn't be this much uncertainty about what the Fed is considering. So if it is just the unemployment rate, and that was all, and the Fed funds rate, the real Fed funds rate, which was all Powell talked about in his Jackson Hole speech, then it's pretty straightforward, and it's weird that it's up in the air. If, on the other hand, as it should be, it's a more contingent, more nuanced forecast, then they have to explain why it's on this sort of tenterhooks, and every little bit of data counts. This is not where you want to be as a central bank. You don't want to be having everyone sort of saying, what are they going to do next? I don't care if they disappoint markets. I don't care if they surprise markets. So, you know, in 2022, 2023, they surprised markets by continuing to hike when the markets were not expecting it. And that was the right thing. Listen to what I say, we'll keep going. But that's not what they're doing here. If if that is what they're doing here, they should just go for it.
I say, if Powell can't be bullied, Powell & Co., by the 16th largest U.S. bank collapsing, then they probably shouldn't be bullied by a couple of bond traders trying to price in 50 basis points.
Well said.
Adam.
Well said, Danny.
Thank you. Thank you, Adam. And just for that, you can stick around. Adam Posen is staying with us. Okay, coming up, we're going to talk about the geopolitics. Hezbollah is now pointing the finger at Israel. Thousands of pagers exploded across Lebanon, leaving almost 3,000 injured. We're going to catch up with our Middle East reporter next.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics, and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells, we can edit the genome, we can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage, and what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
It's your Bloomberg Brief. Danny Berger in New York. Hezbollah has accused Israel of orchestrating coordinated attacks in Lebanon, which killed several people and wounded almost 3,000. Pagers, which Hezbollah members have been using to communicate, exploded across the country. Israel is yet to comment on the attacks. For more on this, let's go to Bloomberg's Jomana Bersecci. Jomana, what do we know at this point?
Yeah, really remarkable story, Danny. So this all unfolded at around 3:30 p.m. local time yesterday. What happened is these pagers that were handheld by many people in the Lebanese public, including many members of Hezbollah, simultaneously exploded. On the back of that, per the Lebanese Health Ministry, 2,800 people were injured, 200 of them in a serious critical condition, and several others were killed, including a child. And also of note is that the Iranian ambassador also appeared to have been injured in one of these explosions as well. The Iranian embassy tweeted out earlier that he is recovering well. Now, both Hezbollah and the Lebanese government were quick to point the finger at Israel. The Lebanese Prime Minister Najib Mikati said this is an infringement on Lebanon's sovereignty, but Israel themselves have not said anything. They have declined to comment on the events of the last 24 hours. But Of course, one of the major questions is, why were Hezbollah operatives using these pagers in the first place? And this goes back to a directive that the chief commander Hassan Nasrallah gave back in February, where he said and warned military operatives to move away from using their mobile phones because of risk of an interception. But of course, you fast forward to today, and this is the result. This is an extreme breach of security for Hezbollah, the biggest in history, per a spokesperson.
Jomana, so much about fear in this conflict has been one of escalation. So what's next?
And that is the big question. Lebanon is on a high state of alert. There is a lot of paranoia. Many people have chosen not to wear their smartwatches today because of the sensitivity about the geo-tracking system in some of these devices. There is a fear that this operation lays the foundation for a future bigger operation coming out of Israel. And of course, there's another dimension to this, which is that the war has turned from a hot war and the daily exchange of crossfire across the border to cyber warfare now, which is a war of a completely different level. What we are hearing from the Israeli side, not vis-a-vis the operation itself, but vis-a-vis their war objectives, is yesterday Netanyahu said that there is now going to be a new war objective in that they want to reclaim security on their northern border to allow for Israeli citizens to return back there to their homes, which means that there is going to be a renewed emphasis on securing that border. What that means in practice is unclear at this point.
Jomana, we really appreciate it. Bloomberg Horizon's Middle East and Africa anchor, Jomana Bersecci. Now, politics closer to home. We are less than 50 days away from the election. Mail-in early voting has already begun in some states. Adam Posen, president of the Peterson Institute, I'm pleased to say, is still with us. Adam, we were just talking moments ago about the Fed's decision today. I want to know about a month from now, when they'll have to make a decision the day after an election, and considering recent history, we might not even know who was elected at that point. What does it mean to be setting monetary policy around such uncertainty?
Here, I think the Fed has gotten one thing importantly very right and one thing not so right. The important thing under Jay Powell's leadership is they have said they're going to be the fair umpire. They're going to do the right thing for the economy, irrespective of the election. Obviously, people cutting rates this close to an election, they are at risk of being accused of playing politics. I believe they're sincerely just trying to do the right thing for the economy. And so they're not going to be afraid. We were just joking about being bullied. They're not going to be afraid where there really is a bully to do what they think is the right call in November. Where I think they're missing a beat, and I wrote about this before Jackson Hole in the Financial Times and talked about it on Odd Lots with your colleagues, is that we know, whether it's Harris or Trump, that there's very likely going to be extremely further loosening in fiscal policy. And it's going to be much larger and more irresponsible under Trump than Harris, but either way, there's going to be a loosening. We know that whether it's Harris or Trump, there's going to be increased tariffs. Again, it's going to be much worse, much bigger under Trump than under Harris, based on what they've said, but there will be additional tariffs on China and Mexico either way. So there is going to be inflationary pressures by the time we get to second quarter of 2025. And it would be good if the Fed, in a nonpartisan way, admitted that they cannot commit, as they keep seeming to do, to being on a long-standing path of easing through 2025, given these realities.
Adam, just to be clear, and by the way, that Odd Lots episode was wonderful. I think he used the phrase rifle shot to describe Powell's his speech at Jackson Hole, which was just perfect. But so just to underline what you're saying, whether it's Trump or it's Harris, are we going to be in a situation where mid-next year the Fed either needs to stop cutting or even hiking, regardless of who's president?
In my view, yes, with a high degree of confidence. I think if it's Harris, they'll have to stop cutting, and if it's Trump, they'll have to start hiking, based on what the policy statements and the party platforms are. And, you know, I'm 65, 70% sure they're not going to do the 100 basis points currently priced in for 2025. Whether or not they're going to hike is contingent on whether Trump wins, but either way, I think it's wrong for the Fed to just pretend the future isn't going to happen. I think it will be right for them to reverse, but I think it would be good if they said, in a nonpartisan way, that possibility is there.
But Adam, I got to be honest, like, how do they actually do something like that? Because, you know, if they start talking about tariffs, people are automatically going to say, okay, the Fed is going after Trump with a presidential nominee who's already threatened the Fed's independence, not directly, of course, it's been according to reports, but there's already just so much contention over this issue.
I think Trump has directly threatened the Fed independence. It's not according to reports. He said he wants a say as president over monetary policy, which your Bloomberg colleague David Wilcox has written about, is a direct threat to Fed independence. But anyway, leaving that aside, this is why the Fed people were not happy with my writing or talking about this. Not that they care that much what I say, but to the degree they care. And I understand that their instinct is, let's just shorten the time horizon, let's just try not to offend anybody, let's just try to keep it narrow. But I think it puts them, all that does is move the awkwardness, you know? So it doesn't, in the end, make things better. I think, and central banks cope with this all the time. Central banks in developing countries where the politics is what the U.S. politics, unfortunately, is increasingly looking like, largely due to Trump, is going to be much more uncertain, much more unstable, and the central bank has to be an anchor, and it doesn't fulfill its role as an anchor if it just sort of keeps its head down.
Adam, away from the Fed, we are in this period where you have a grab bag of policies being thrown out there by the candidates, from tariffs to deportation, and then from Harris, you have things like small business tax credits, promoting home building, supporting first-time home buyers. As you dig through the details, putting aside the likelihood of some of these things actually being passed, are you hearing anything that you think would be beneficial at this point in the cycle?
Oh, there's a lot out there that's beneficial. You were talking with Anne-Marie, I think, before I came on about the SALT deduction and some of these other things. And I don't know if either of you said it. I mean, Trump's like, you know, the old Oprah joke, right? You get a car, you get a car, you get a tax cut, you get a tax cut. Harris is less so. I mean, it's a meaningful difference. But, you know, the key question is, as Reagan said, as Biden said, is it spending to increase supply? Is it investment, or is it spending just for spending? Similarly, tax cuts. Is it tax cuts to increase investment, or is it just tax cuts? And that's the criterion you got to look through this. And some of the things that Harris is talking about continue to build up supply. There are a few things Trump is talking about that build up supply, but mostly not.
Okay, Adam, we're going to have to leave it there. Thank you so much for joining this morning. It is always a true pleasure to speak with you. Adam Posen of the Peterson Institute. Okay, coming up, Gas Tech Conference is in full swing in Houston, Texas. That's why your very own Manus Cranny isn't here. We're going to bring you his discussion with energy executives next on Your Brief.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
It's Bloomberg Brief, Danny Berger in New York. The 2024 Gas Tech Conference is underway in Houston. The gathering brings together energy industry leaders to discuss energy transition and how to deliver on global net zero goals. Manis is there now. He moderated a discussion with the top players in LNG.
At a high level, actually, we're very strong believers in the role of LNG, and we've got a deep belief as well that the world has the capacity to absorb more LNG. And you only have to look to some of the nations around the world. We're an Australian headquartered company, so the bulk of our customer base is in Asia. And when you look at what's being done in places like Japan, Korea, and China, and I'm sure Connie-san can speak to what he's seeing in Japan, we see continued appetite for more LNG. We see this reflected in contracting behaviors, so we're seeing long-term contracts being signed from customers in Asia. We see this in the construction of new import terminals. And, you know, when we get asked this question about this LNG glutton, are we worried? We actually look back at history, and there have been forecasts of LNG gluts a few points in the past, and none of them have come to pass because the reality is the market is hungry for this source of fuel. Now, if I can just connect as well to the energy transition conversation, one of the things that I think we all need to recognize is the imperative to tackle emissions. And when gas is used in lieu of coal for power generation, it's got half the life cycle emissions intensity. Now, the total global LNG market today is equivalent to about 12% of coal use. So there's a lot of room for us actually to grow the LNG market, to provide that reliable energy, provide that affordable energy, and tackle climate change.
That was the CEO of Woodside Energy speaking at the Gas Tech Conference in Houston. She's speaking there with Bloomberg's Manis Cranny. And later today, Manis will be moderating a conversation with the former Secretary of State, John Kerry. Focus will be on climate cooperation and energy security. You can follow that panel. Live Go is where you want to head on your terminal. Okay, let's get you set up for the rest of the day. U.S. housing starts and building permits data, that comes out at 8:30 a.m. Eastern. Then is the main event, a Fed rate decision at 2 p.m. That will be followed by Chair Powell's news conference. Tune in to all of that at the Fed Decides today. The surveillance team will walk you through it at 1:30 p.m. Just to give you an update of where markets are pricing things, we're currently at 60% odds that they will cut by 50 basis points. Wow, so 60% odds that they'll cut by 50 basis points. That's actually moved up as the show has gone on. Euro versus the dollar, you can see just dollar weakness across the board. We're playing defense ahead of that Fed decision. Your euro versus the dollar at 113. Dollar yen, that's at 141 after earlier this week going below 140. Bloomberg dollar spot as a whole is weaker by 0.2%. So 111 on your euro versus the dollar. That's where we stand. Kit Juke's talking about a weaker dollar, just given that the Fed has more room to cut. Okay, that's it for Bloomberg Brief. Surveillance, that's up ahead. This is Bloomberg.
what legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of safety. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
You have lower interest rates, which the Fed is going to deliver. The question is how much.
We're looking for a 25 basis point rate cut, but for them to really signal they're going to do a sequence of cuts here.
A lot of the people on the street that have 25 basis point rate cut calls, they'd have no problem with the Fed going 50 either.
There's a really good chance that they move 50 simply to front load the process.
They do need to be cautious of being too dovish because we're coming off some pretty significant speculation, but it's still not relieved from the market yet.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
It is the most important day of the year. It's Bramo's birthday.
Oh, thank you.
Happy birthday, Bramo.
Thank you. Well, you know, I hear there's a meeting just for my birthday.
We're doing just that. Chairman Powell organised it. We're bringing cakes in a little bit later. That's all we're going to say. All right? From New York City this morning. Good morning, good morning. Let's get your trading day started on this Fed decision day. Coming into it, very close to all-time highs on the S&P 500 and just about holding on to a 7-day winning streak. Equity futures firmer by 0.1% on the S&P. Lisa on the NASDAQ up by 2.
A key question about whether we continue with the rotation trade, whether we continue with this feeling that the Fed can cut rates significantly, and that can be good for risk assets, very much on the table today. Ray Dalio says the right thing is 25. Jeff Gundlach says it's 50. We're already in recession. Jamie Dimon says, everyone calm down. It's going to be okay. And that's going to be what we're going to be talking about for the rest of the day.
This is a low conviction meeting. We haven't seen one like this for a long, long time. Given we don't have much conviction, why would the Fed? And this is what Ian Lincoln of BMO's got to say. If the Fed isn't certain as to the size of the first cut, it is very unlikely to have confidence in the magnitude and pace of the full campaign. Are we expecting too much from this Federal Reserve this afternoon?
You mean clarity? Yeah, I think maybe we're not going to get the same kind of clarity as people previously had been hoping for and dreaming of. But you do get a better sense over the balance of risks, and maybe even get a dissent, maybe even from a potential governor. For the first time in about 20 years, we're looking at a Fed that has had consensus for so many years that now suddenly that could be used as a tool to potentially give even more uncertainty around the edges that we can dissect for the next couple of months.
So let's get to the Canada. 2 p.m. Eastern Time, you'll get a Fed decision. 30 minutes after that, after we've poured through the statement and the forecast, we'll get a news conference with Chairman Powell. And then after this one, you've got to wait until November 7th, 2 days after the general election in this country. And things could be very different by the time we get to November. On the campaign trail, it's been promise after promise. Anne-Marie, Trump will bring back a tax break for the people of New York. Harris will cap childcare costs. Spend, spend, spend.
As I've been saying, this is the Oprah Winfrey election, especially when it comes to taxes. Everyone seems to be getting a cut. The latest coming from Trump, though, on SALT is a U-turn from his own legislation that he's out on the trail every single day touting, the Trump-era tax cuts, where they capped SALT at $10,000. Now, you could think this is a pure play, less so for Trump at the top of the ticket, but down ballot. He's going to be speaking tonight on Long Island in New York for a very swing district. And the issue there is Republican holds it now. They flipped it after decades. This is Republican Desposito. And I think Trump is trying to help shore up some of these House votes. But again, how is he going to pay for it?
That's the objective. Let's talk about the cost. This comes from the Committee for a Responsible Federal Budget. Check out this number. We estimate this would increase the cost of extending the 2017 Tax Cuts and Jobs Act by $1.2 trillion over the next decade.
And it's a point that you made yesterday that I thought was a really important one, which is, as much as people say divided Congress that can't get through, is that really the case when you have enough tax cuts that potentially are bipartisan, where you potentially are catering to the other side that could potentially pass said tax cuts? It all just raises the prospect of more spending, less revenue, without necessarily an offset that really hasn't been recognized in the debt markets, which, again, going back to that November 7th meeting, what do you do, Fed? I mean, how do you deal with this? And then why not just front load it now and then say, we'll deal with it then and just, kick it over to then?
That's why I think what Powell says today is almost more important. If there's 50, does he come out and say we are trying to get ahead of the curve? Because this is going to be used by Republicans saying that they're only cutting 50 because what do they know that we don't know? But it's going to be used as Democrats says, well, clearly inflation is no longer a concern. And now, this is what Lael Brainerd said this week at the Council on Foreign Relations, we need to make sure that we secure the labor market gains.
There's a lot to work through this morning. If you're just tuning in, good morning. Equity futures right now on the S&P 500 firmer by 0.1%. In the bond market, yields up by a basis point or two. The 10-year 366.24. Euro dollar. Stronger euro, weaker dollar, Lisa, here, 111.38.
If you take a look at the last Fed meeting, you have a dollar right now on the DXY index that is about 3% weaker. This is basically across the board, this baked-in bet that the Fed is going to cut not by 50 or 25 basis points. Maybe it's not earth-shattering, but we care. And there's a question going forward of whether they're still going to cut by more than 200 basis points by the end of next year. And that, I think, we might get some signal about today.
It's an interesting setup, isn't it? Equities, bonds, foreign exchange, stocks near all-time highs. Bond yields near the lows of the year. The dollar near the weakest level of the year. It's an interesting setup. Just how stretched are we going into this one?
How offsides could traders be if the Fed goes by 25 basis points and says, you know what? Baby Jamie Dimon had a point. Everyone calm down. It's going to be okay. We're moving. It doesn't matter exactly the pace. We're going to get it down.
Did he give us a weather forecast yesterday? Storms, hurricanes, something worse?
The clouds, are gathering over the geopolitical framework.
That's what it feels like. More on the geopolitics later. Stunning scenes out of Lebanon yesterday, like something out of an action movie. We'll catch up with Jemana a little bit later this hour at 6:30 Eastern Time. Coming up this hour, we'll also catch up with Julian Emmanuel of Evercore with stocks near record highs ahead of the Fed. We'll speak to Bloomberg's Kenny Lyons with more tax promises on the campaign trail, and Torsten Slok of Apollo on why monetary policy doesn't seem very restrictive to him. We begin with our top story, decision day for the Federal Reserve, with investors divided on the central bank and whether they'll cut rates by 25 or 50 basis points. Julian Emmanuel of Evercore is still bullish. This is what he's got to say. The unique intersection of monetary and political volatility in late 24 reinforces the refrain we've heard from many clients. This is the most difficult bull market we've ever seen, but by no means derails the path to 6,000 at year end. Julian's with us around the table. Julian, good morning.
Good morning.
Are we overstating the importance of the first move of the Federal Reserve?
No, not this time, because really when you think about it, the backdrop is probably as unique as we could have ever imagined. And I think a lot of people are surprised that that is the context with stocks at all-time highs. But the fact is that we've seen the economy start to weaken around the edges. It's normal that the economy should slow. That's what we've wanted all along. But confidence is a very fragile thing, particularly when the economy is starting to slow and you're getting signals from the labor market. And so in that respect, really, the Fed's job is to make sure that it sends a message, whatever it does today, and we do think they do 50 today, that it's on the case if there is a deterioration in the data in and around an election that is going to be more divisive than we can imagine at this point.
Evercore's already sent a message in the last week. Ed Hyman, Evercore, throwing in the towel on a hard landing call, gave a whole host of reasons for that. As you sit here this morning, could you share a few of them? Why a little bit more constructive now?
Well, look, the labor market data is, again, slowing, but by no means, by all rights, you're still under Nehru in terms of where the labor market is. The weekly high-frequency data, the confidence has been subdued, but it hasn't really mattered because, and again, as we saw this, is the consumer continues to spend. There's a concern that the savings rate has dropped as low as it is, and I think that's something we'll be watching very carefully. But so far, it does appear as if the deceleration is only that, a deceleration and not a downturn.
How much does this hinge, going back to the first point, on just what the Fed does and how much they cut this year and signal for next year?
Well, I think there's been a lot of Sturm und Drang around the concept of data dependency. But when you're at a turning point like this, it is important to at least acknowledge the importance of data dependency. And I go back to my idea that confidence, particularly around the election, could be very fragile. And so from that perspective, the Fed needs to indicate that even with 50, we are still in reasonably restrictive territory, and we'll see and we'll figure out what we have to do as we go along. But that, yes, this is the beginning of a cycle and not a, one-off.
Some people wonder how could we get to 6,000, especially by the end of this year, if we've already seen such high valuations in the tech sector after we've seen the rally already in the small caps as well as some other sectors that have been challenged. And you say, watch the buybacks. It's all about the buybacks. If they can buy back their shares cheaply, it doesn't matter. How much is that really underpinning this whole call that if you get lower rates, that is going to just de facto support stock valuations in a new kind of way?
Well, and again, when we think of the entirety of this year, it is proper. It is right to be a little bit uncomfortable about where valuations are. That's part of this wall of worry that has supported higher prices. But when we step back, the uniqueness of the earnings cycle right now is something that really has supported and we think continues to support markets. We could think back to 6 months ago. Everyone was absolutely, obsessed by the fact that the other 493 stocks in the S&P 500 weren't growing their earnings. We find out in the second quarter that those 493 are back to 5.5% earnings growth, and the picture looks as good, if not better, over the balance of the year and into 2025. And that, to us, along with the fact that the Fed is going to be supportive, is, in our mind, sufficient to get to 6,000.
Julian, you keep mentioning this political uncertainty. In 2020, the election was on November 3rd. November 7th is when networks started coming out and saying who actually won. The Fed might be going into their next meeting not knowing who's president of the United States. How does that affect their decision?
It most certainly, does affect. The first thing they'll want to do is see, again, how the data evolves between now and then, but also see how the asset markets evolve. And I think, this is part of the narrative of really our generation, to disentangle stocks from the economy. People say they want to do it. You can't do it. The wealth effect is a real concept. And so they're going to really have to monitor the situation, particularly with regard to the ability of the election to be contested. And I think, our analysis is probably less like 2020 in terms of the risk and maybe more like year 2000, where you didn't know who the president was for an entire month afterwards.
So let's stay on that. What did the Fed do in 2000 that maybe they should look back and consider this year?
Well, the economy was slowing in 2000. We had very high valuations, as we do now. So there are a lot of similarities. And the Fed just kind of sat on its hands and didn't cut rates until January of 01, when, frankly, the mood had soured, financial markets had soured, and it was already too late. The recession of 01 was in front of us, and we think that Powell and the Fed understands that history and is not going to allow that to repeat.
Why do we have so much confidence the Fed will get in front of some of these challenges when we really don't know whether they'll go 25 or 50 at this meeting?
Again, because if you think about it in terms of where the Fed is and their legacy, and they've been through an awful lot, and I think, you know, you can talk about the Fed in various ways, but the most effective thing they've done is fight problems. You know, the pandemic response was incredible. In fact, the unanticipated response to inflation. I mean, let's get serious. 525 basis points worth of tightening, and we haven't had a recession, and the yield curve has been inverted until recently. And now, of course, we're all freaked out that the yield curve is uninverted. And I would say when you think about what the politicians are planning to spend next year, you kind of know why. But it's been a remarkable time.
Before you go, just a quick question. Super short time horizon. If they don't validate market pricing today, is this market in trouble?
Yeah.
What kind of downside are you thinking about?
You know, you could get sort of in a multi-day time frame, 3 to 4%. We'd buy that. The interesting statistic that we find very relevant is in presidential election years where you were up double digits on Labor Day like you are this year, 6 out of 6 times you have finished higher on December 31st than where you were at Labor Day. That's part of our bullish thesis as
Julian, thank you. We appreciate it, as always, sir. Thank you very much. Julian Emanuel of Evercore, kicking off our Fed Day coverage with equity futures just about positive on the S&P by 1/10%. With an update on stories elsewhere, with your Bloomberg brief, it's Danny Berger. Hey, Danny.
Hey, John. A legal victory for Google. It won a court fight over the EU with a $1.7 billion fine for violating competition rules. Back in 2019, the European Commission had concluded that Google illegally prevented rivals from placing ads on third-party websites. Judges at the EU's top court, though, said that regulators made a mistake in that probe. Just last week, however, the court had ruled against Google's attempt to avoid a nearly $2.7 billion antitrust penalty for favoring its own product results on search. Tupperware has filed for bankruptcy. The publicly traded kitchenware company has struggled with declining sales and growing competition for years. It's listing assets up to $1 billion and liabilities up to $10 billion. Tupperware had dominated the food world of storage for decades, but began warning in 2020 there were doubts it would be able to stay in business. Steve Cohen has stopped trading for Point72. The billionaire hedge fund founder will remain as Point72's co-chief investment officer, but he's no longer investing client capital. The firm says the 68-year-old will instead focus on driving the firm's growth and mentoring and developing talent. Cohen, who also owns the New York Mets baseball team, has been one of the dominant forces in the industry for more than 3 decades. And that's your brief, John.
Danny, thank you. Thanks for the update. More updates from Danny in about 30 minutes' time. Up next on the program, more big promises on the campaign trail.
I want people to pay fair taxes and all that, but she's going to be raising your taxes to 50, 60, 70%, and it's not sustainable.
My plan is that no family, no working family should pay more than 7% of their income in child care.
The latest promises up next from New York City. Good morning.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Just about squeezing out a 7th day of gains on the S&P 500. Just about in yesterday's